What can I say except you're welcome? Isn't it great? If you listen to me, you make a bunch of money. Isn't that crazy? Isn't that crazy? Everyone thought I was crazy. Turns out, I might know what I'm talking about when it comes to this stock stuff, huh? Markets at all-time highs. Gamestop's ripping. Pretty weird, huh? Pretty weird. It's pretty weird. Should I play it for the people? Should I play it for the people? For the people? I know what you guys want. I know what you guys are actually coming here for. I know it's not me. All right, we'll give it a second. We'll let a few more people come in. We'll wait a second. Oh, look at it, chat. What can I say except you're welcome? Woo! Man. What are they gonna say when it just keeps going up, bro? What are they gonna say? What are they gonna say? It's pretty funny. It's pretty funny. Pretty funny. I know there's nobody watching, but you know, if you guys would have just listened, all the haters, they should have just listened. They should have just listened. What if it just never stops going up? The market is the market up today too? I honestly haven't even looked at my computer today. NASDAQ and S&P hits fresh record highs. Wow. Wow. The Bears are in shambles, bro. The Bears are in shambles. What's up, Moose? How you doing, bro? Bears are sad. Aw, were you bearish and you got wrecked? Aw. There's literally nobody here. I just think it's so funny, bro. I think it's so funny. Charles Schwab to launch direct Bitcoin and Ether trading. PepsiCo earnings beat estimates as Doritos, Lay's price cuts win back shoppers. Oh, yeah. It's that big win, you know? The big win in the air, you know? This is why I didn't want to sell covered calls either. Like, I'm sure eventually it'll sell off, but this is why I didn't want to sell covered calls, you know? What if it just keeps going up? What if it just keeps going up? What are they gonna do then? Michael Burry buys the dip in Salesforce and other software stocks as AI-fueled sell-off. After AI-fueled sell-off? I saw Michael Burry posted a new Substack, but you probably need a sub to read it. reflexivity between software credit and software stocks has been a main driver of negative returns this past several months, culminating in a deep sell-off last week. There's a powerful technical factor driving down software stock valuations, but it's temporary. The credit side for software is not large enough to continue driving these stocks lower. I bet this is a pretty good article, but... Oh, Bearish Burry? Bearish Burry's flipping already? Aww. Aww. That was fast. What happened? What happened? What happened to Bearish Burry? It's pretty funny how quick everyone flipped. Everyone a week ago was bearish. Not anymore. Not anymore. Changes real quick. I mean, I guess Planter's still down, but is Nvidia back at all-time highs? Oh, yeah. That short's working out great for him. Oh, that's hilarious, bro. That's hilarious. People actually follow that guy. People actually follow Michael Burry and put, like, weight on anything he says. Yeah, he was right. He was right for, what, a month? Good job, Burry. You were right for a month. Good job, Burry. Good job, buddy. Oh, man, that's hilarious. That's hilarious. I can't get over that. I can't get over that. There's so many people that suck off Dr. Burry. He was right for a month. Oh, he probably didn't even take profits on his trades. Alright, I'll stop talking shit on Burry. I just think that shit's funny, bro. It's so funny how quick people change. Everyone literally a week ago was bearish, and now market's at all-time highs. It's hilarious. Just gonna grab food and I'll come hang out this afternoon. Alright, Moose, no problem, bro. What's up, Brian? How you been, Brian? I feel like it's been a while. Oh, I'm having a blessed day. It's a good day so far. Went and hit some stair climber and some sauna and some abs. Got that those ab training going. Good day so far. GameStop's up for now. You know, whether it keeps going or not, we'll see, but it looks fantastic for now. Even going up like 2-3% a day. Fire. Absolute fire. Find you a jiu-jitsu school. I've thought about doing jiu-jitsu. I just don't want to get hurt. That's my biggest thing. I've already got enough injuries from skateboarding. I don't want more. Man. The amount of people I've told to buy GameStop. The amount of people I've told that GameStop's going to make me a multimillionaire. And they just laugh it off. Or they just think I'm crazy. I mean, it's still a little early, you know. This is just some short-term price action. But, man. Oh, it's funny. It's funny. It's like anytime the stock sells off, the low is just getting higher. It's like at first it was $18, and then it was like $19.20, and then it was like $21.50, and then it was 22 something. I mean, what's the low now? You know, when the stock sells off again, where's it gonna go? You know, is it gonna go just to like 23, like 23.50, 24? Like, the lows just get higher, and like, to me, that's everything. You know, what's gonna happen if the market sells off again, and GameStop doesn't sell off to 20 again, or like 22, whatever? I don't even remember if it went below 22. And I don't even think it ever went below 22. Like, I don't know. It's gonna be interesting. Interesting stuff. Here, I won't play Lambo Season for now. Every time I play Lambo Season, it like jinxes it. And nobody here wants to listen to Lambo Season, let's be real. I had a revelation that Q1 is going to have a higher EPS than Q4. That'll be the nail in the coffin. I think Q1 is going to have high or close to the EPS of the full year, if I'm just being honest. I think the EPS is going to be pretty high. Like, I mean, they're sitting on what? 9 billion cash, 10 billion times 3.5%, so divide by 4. So you're getting about 80 million just from cash alone. Who knows what Power Packs is going to... Well, okay, so maybe it won't be maybe it won't be bigger than the whole year, but it's going to be massive. Probably going to be like 200-300 million. I don't know what they'll do on the business at this point. I mean, what did they do last year? I guess we could try to like calculate it. I haven't really like came up with a prediction for Q1 yet because I honestly don't even know. But let's see. What did they do last Q1? Don't you dare jinx this. We'll see what happens. As you know, I'm not very optimistic. Even though I think this play is going to take a really long time, but I swear I'm the only person that can make like 20-30 grand and not be happy about it. Like, I swear I'm the only person that like makes that much money and is just like boring. It's so stupid, bro. There's something wrong with me for sure. There's definitely something wrong with me. So last Q1 they only made 44 million, but I don't even think they made profit from the business last Q1. Yeah, last Q1 they lost 10 million from the business, and then they made income from the interest. So when did they make a profit in Q2? Let's see. They made 66 million profit in Q2. But I think Q2 is when the Switch got released, wasn't it? I don't really remember. I think Q2 is when the Switch got released. 41 million in Q3. And then 232. Oh wait, that's 12 months ended. That's... What did they actually make for the quarter on Q4? What's up, Varley? How you doing, Varley? Good to see you, bro. Where is it? I think it's down more. Fiscal year. No, we want the quarter. Where's the quarter? Where is the quarter? Do they not have a... They should have a financials for the quarter. Where is it? I think I went way too far up. Where is that? Maybe they didn't post their financials for the quarter. I don't remember. I thought they did, though. Yeah, but they lost money on the business in Q1 and they only made money from interest. So I don't think that's relevant. I don't think that's a relevant quarter because the business is profitable now on top of the interest. So I don't think equating Q1 of last year to the upcoming quarter is, or this quarter. I just don't think that's relevant. Do they not have the quarterly sales or anything? They have to. Quarter. Is this it? No, that's the year. I don't know if they posted their like Q4 quarter numbers. I don't think they did. No. Where is it? They had to have. So this is for the fiscal year. I don't think they posted their numbers for Q4. I think they just posted the year. Unless it's in writing. Yeah, I don't think they posted their numbers for a Q4. I think they just posted the year. I don't know. I don't think they posted their quarterly numbers. Quarterly report. It's gotta. They have to be here though. Am I tripping, chat? Am I tripping? I don't think they posted their numbers for Q4, bro. This is all fiscal year. My God, that's what's priced in. It's a comparison year to year, and Q1's historically the lowest quarter, so it means a lot if the EPS goes up after SPY inclusion. I nobody covers the stock, so I don't know if that's what's priced in or not. I think I don't know if I can agree with that, but maybe. Could be. I think if that's what was priced in, I don't think the stock would be going up. But yeah, I don't know. I don't think about stocks like that, so happy you keep covering the stock and let open dialogue here. Oh yeah. It's just nobody comes here to chat. Cuz honestly nobody cares about GameStop, which is awesome. Yeah, I don't think they posted their quarterly numbers. Cuz they have fiscal year right here. 232 million for the year. I guess I'll have to do it this way. I'll have to, let's see. What's up, Isaiah? How you doing, man? So 232 in operating income. So Q1 they lost 40 million, right? They lost 10 million. So minus 10 million. 66 million. So 56 million. And then 40 million, so like 100 plus million for Q1, 2, and 3. And then your total for the year is 232, so like 132 million for Q4. What did they do last Q4? Damn, that's big. 132 million profit for Q4. What did they do last time? Is this Q4? I think this is Q3. They lost 33 million. I think that was Q3. Lost 22 million. Lost 35. Oh, lost 50. So what did I say? 20, 50, 22. What was Q3? I don't remember. $52, 33. So they lost like 90 million for Q1 to 3 on the business. And then Q4, or for the year, they ended up making 20. Oh, they lost 26 million. So they lost like 100 million last year. God, it could be a big quarter. They could make like 100 plus million for Q1. So 180 million with the business and cash. And then Power Packs is probably like 10, 20 million in income. So 200 million in net income for Q1. And then Bitcoin as well. I mean, Bitcoin should have a gain because they should be calculating it from the last reporting, which was 368 million. So it should be trading, well, assuming it's going to be trading around where it's at right now or potentially higher. So you'll be at like 400 million on the Bitcoin. So that'll be like a 20 to 40 million profit. So anywhere from 200 to 250 million profit for Q1 alone. That's crazy. That's crazy. Potentially, you know, I guess it just depends, but yeah, very interesting. Or wait, was this the opera? That might be the. Let's see last year. The full last year. This is the full last year. So 33 million profit last year. Oh wait, that's US only. Wait, was I looking at the US only and not total? I might have been looking at US only. Where is it? Oh no, I was looking at the total. Okay. So 26 million operating income for the business, but they lost 80 million. Oh wait, no, 26. They lost 26 million total. So they made like $80 million-ish for Q4 potentially. Yeah, I'm just gonna say it's like 100 million for Q1, just from the business, and then cash, 80 million. I'm just gonna say like 20 million profit from power packs because I don't know how profitable power packs actually is. So yeah, probably 200, and then if you're counting Bitcoin, 250. So between 200 and 250 net income for total net income for the quarter, just for the quarter. Yeah, dude, they're on track to make over $1 billion this year, and power packs could be bigger than I think it is. I saw a post on Reddit that there was like 156,000 visitors to Power Pack's website or something like that. Obviously, I don't take anything I see on Reddit. You know, I don't find it relevant, and I don't, unless I can verify it. But that's quite a bit. You know, if every one of those people were spending at least $25, you know, that's 3.7 million revenue just, you know, if every single one of those people bought one thing. So yeah, I just don't know how big Power Packs is gonna be. I think it's gonna be pretty big, but I don't think it's gonna be like pulling in like 50 to 100 million net income. I would say like 20 at the most. Yeah, right here. Oh, website traffic report. Total traffic to this website has increased by 150% since last month and is on a positive trend over the last 6 months. Oh, 433,000 total visits, but 122,000 unique visits. So I'd imagine the unique visits is people who actually bought something. And it says traffic value 2.9 million, so that's pretty close to what I calculated. But I think that's just for 1 month as well. I don't know if that's total. Oh yeah, see, total visits. I'm not really sure. Like I said, I don't trust anything on Reddit. So yeah, kind of interesting. But I think it's safe to say they're going to make at minimum 200 million for the quarter. I think that's safe, a pretty safe bet. But that's huge. And their revenue should be up potentially. I mean, I guess it also just they did close a bunch of stores at the beginning of the year, so maybe revenue won't be up. They did close 470 stores. So it's possible that revenue won't be up, but I'm going to still say they're going to make like 200 million profit for the quarter. I think that's a fair guess. We care about Corey. Maybe. Maybe. Appreciate you, though. Appreciate you, bro. Now I'm starting to get it. Oh, I got it for a long time, my friend. I've gotten it for a long time. Don't you worry. I think I've predicted every single thing that's happened so far as financials go. So I definitely got it. I've been pretty accurate so far. Feels like we are the last Mohicans in the chat group. Yeah, the stream is dying, bro. The stream is dying. Is what it is. Is what it is. What's up, Ron? Hope you're doing good, bro. Hope you're doing good. Was there anything else here? Oh yeah, PSA had an advertisement for power packs on their website. I didn't ever look at it. But somewhere on here. Or not. Do they not have a... Where is it? PSA verified repacks? No. Well, this is why you don't trust anything on Reddit, because I don't see anything about power packs on this website. Is Trump talking or later? I have no clue, bro. I don't pay attention to what Trump's doing. Zero clue. I don't listen to crypto scammers, even if they are the president. Crypto scammers have nothing intelligent to say. Okay, so maybe there's not an ad on here. Reddit's lying. Oh, it looks like an email, actually. So that makes sense. Yep. Pretty exciting. A lot of posts. Usually when this happens, it doesn't last for very long, so we'll see. We'll see. Is there any articles to read? Probably not. Oh, there's a Seeking Alpha one. Any clue what is up with this bull run the past week? What do you mean? The market's been bullish. just because everyone and their mom was bearish doesn't mean the market was never not bullish. The market's always been bullish. It's just people got stupid for a while. And now they're paying for it. Oh no, an Iran war. Oh no. Yeah, that's a reason to be bearish. Because I think it's fucked and I missed most of it. Okay. Maybe you should stop being a day trader. If you if you haven't made money in the past like week or two, I mean, you should probably just give up on trading, honestly. It's been the easiest last couple weeks to make money ever. That's wild. That's wild. Maybe try finding a business to invest in instead of wasting your time trading. That's wild. That's wild. Dude, they just rewrite this article and just repost it every week. It's so ridiculous. Dang it, no articles. That's a rip. Yeah, straight up. Like, if you're a day trader and you haven't made money the past couple weeks, I would just give up. Like, straight up. Like, just give up. I don't want to shit on your dreams, but you're wasting your time. And if your dream's to be a professional day trader, I mean, it's not the greatest dream. Being a professional gambler, basically. Not a very good professional gambler if you haven't made money the past week. The market's literally only gone straight up. Yeah, I guess it's down now, but I don't know. Seemed pretty simple. But this is why you're an investor, because then you don't end up like that guy who just is sitting on the sidelines and thinks the market going up is fucked. It's like, no, you just don't understand the market. You thought it was bearish? Okay. Just because the stock market sells off for a little bit doesn't mean it's bearish. The market's been bullish. When was the last time the market was bearish? For 4 months in 2022 to 23? Right? Like, that's not bearish. It's not very bearish. The market's been bullish and will always be bullish, as you can tell. Sure, you have some big sell-offs sometimes, but what always ends up happening? It always goes back up. Like, that's why day traders and stuff make me laugh, because most of them aren't good. Most of them aren't good at it. What was the last little bear market you had? January of 2022 to, yeah, pretty much 2023. So like a year-long bear market. And then look what happened. It went up like 30% the next year. Yeah, if you're not making money as a trader, just give up. Like, straight up, just give up, bro. Just give up. Like, making money as a trader is so fucking easy, bro. You just had to buy the dip and fucking wait. Simple. No skill involved, really. Gotta stay in the know is a part of it. Notifications the easiest way. GME's up over 10% since the Barking Puppy live stream. People can say what they want about him, but the kid can cook. God, there was something I was thinking about that the other day. I can't remember what it was. Something about manic. Something about mania. I can't remember what it was. I was thinking about some quality tinfoil. I just don't remember. Like, is it possible that he faked being insane because he knew he would get the cops called on him? Is it possible? Probably not. But what if? What if? Nah, he was tweaking. Yeah, true. That he was. Very much so. Didn't he have a bad breakup or something? Something like that. I'm not really sure. I had a video I was going to post about it, but I just decided not to. I deleted the video. I'm not going to post. That shit's just sad, bro. Like, sure, the video would get views, whatever, but I'm not going to post that video. That shit's sad. Craziest investment story of all time. I mean, if you're on Reddit, I guess it might be, or Twitter or whatever. To me, it's just a normal investment. Like, most of that stuff is completely, I mean, basically at this point, all of that stuff is completely irrelevant. Then we peak in. Worth the investment in entertainment alone. I canceled cable years ago and have not been disappointed. Bro, I watched Halloween End a couple days ago. It was like brand new on Netflix. That shit was garbage, bro. I do not recommend that movie. Halloween End was trash. What a trash film. Arca, what's up, Arca? Who the fuck cares about Yappin' Puppy? I agree. I agree. I thought Barking Puppy was interesting up until he promoted a shit coin. And, you know, as soon as someone promotes a shit coin, I automatically lose respect for them. Doesn't matter if he got hacked or anything. Ruben, what's up, Ruben? Listen, working, I know it probably doesn't help the chat, but thanks. Hey, I appreciate you being here, Ruben. I appreciate you, bro. I appreciate you always supporting the channel, my friend. Obviously, I want you to be typing in the chat, but I know you're busy, so you don't even gotta worry about it. Although I did see, I don't know if this is real or not. Was it on Dexerto? Let's see. I saw an article that said if you type in the chat, you won't get ads. I don't know if that's something they implemented or something they're going to implement, but I did see an article about it. Where is it? I don't remember what website it was. Here's archive. Let's see. Maybe I can just type it in YouTube live stream ads. I mean, this isn't the website I found it on, but yeah, April 15th, YouTube will show fewer live stream ads during purchases and chat spikes. YouTube is changing live streaming ad timing to avoid interrupting purchases and peak chat moments, giving creators a clearer view of where automated monetization is headed. YouTube's changing how ads appear during live streams, holding them back at moments when viewers are most likely to be engaged or spending money. Update applies to creators using automatic ads and changes the platform's default logic for live monetization. Instead of simply inserting ads on a fixed pattern, YouTube is now making more real-time decisions about when not to interrupt a stream. The article I read wrote it a little differently. Viewers who buy a super chat, super sticker, or gifted membership will now get a personal ad-free window immediately after that purchase. According to 9 to 5, Google's report on the update, the platform also holds back ads when it detects a spike in comment activity, treating that as a sign that a live stream has hit a high engagement moment. TechCrunch reported that YouTube is doing this to protect the stream's vibe and said the feature works automatically for creators already using the platform's default ad settings. Creators who place ads manually are in a different position. Livestream mid-roll ads can still be inserted manually through Live Control Room. Creators can also delay automatically inserted ads during key moments. That means there's a primary change to YouTube's automated system, not a full rewrite of how every live stream is monetized. YouTube's support page also says creators using live auto mid-roll ads saw an average revenue uplift of more than 20% per hour in its January 24 data. It's not proved the new suppression triggers will increase the revenue, but it does help explain why YouTube continues to push creators towards automated ad decisions. What YouTube has not disclosed is how long those ad-free windows last, how often they are triggered during a typical stream, or whether the change affects revenue differently across stream formats. That leaves creators waiting for analytics, not just announcements, to judge whether the trade-off works. So yeah, I guess, I don't know. I guess not. I guess it's just if you do a super chat or something. So never mind. Never mind. Just get an ad blocker like a normal person. I remember seeing the trailer for Halloween Ends as a kid and thought it looked trash just by the trailer alone. Oh, it's trash. It's trash. It's pretty bad. It is pretty bad. I did not even the kills are bad. Like, they don't even show the kills. Like, it's a terrible movie, man. They don't even show the kills. Let's see. I already looked at news, didn't I? Another absurd AI pivots propelling a new stock higher Thursday. Shares of Myzeum jumps 150%. So what, you just have to announce you're using AI and your stock goes up hundreds of percents? Like, that's, okay. Shows how educated all these investors are. AI? I'm gonna buy it. They got AI. AI. Like a bunch of fucking sardines off SpongeBob. Meep. Meep. AI meep. I want to AI meep. Buy some AI meep. Fucking sardines off SpongeBob, bro. Meep. Meep. Call of Duty movie finally gets a release date. Call of Duty movie? June 30th, 2028. Oh, that's not for a long time. Hellraiser was a real classic. I don't know if I've ever seen Hellraiser. We got AA Ron in the chat. Yes, sir. The AA Ron. Battlefield 6 confirms naval warfare and big fan requested features for later this year. Naval warfare? That'd be sick.
As the struggle between NATO and Pax Armada unfolds on Battlefield servers around the world, we wanted to take a moment to share our vision for the future of Battlefield 6 and RedSec directly with you. We're here to lay out where the year ahead...
I can't remember if I can watch game trailers on stream or not. I think I can. I guess it just depends if it has music or not.
It takes us from maps and modes to features that we know you've been asking for. But first, we wanted to thank you for all of the feedback and your passion for Battlefield.
I haven't played it, so I haven't touched Battlefield, but I'm still interested in what they're doing.
The amazing ingenuity and creative ways our community plays in our Battlefield sandbox.
The guy was driving a helicopter under a bridge.
What you can expect from Battlefield 6
or like
and
in a tunnel
during the rest of 2026.
Season 3 arrives this May, and listen, we've heard your feedback about the kind of map experience you want in Battlefield loud and clear. And that is why Season 3 opens with our reimagining of a classic Battlefield 4 map, Railway to Gold Mud.
Railway to Gold Mud, bro! I love that map.
Which will be the biggest map in Battlefield 6 yet. Nearly 4 times the size of Mirak Valley. Set within Tajikistan after the events of the campaign, this fan favorite has been optimized to match Battlefield 6's visual quality and gameplay. This means we're introducing new cover, larger aerial spaces, and more opportunities for strategic play when it comes to close quarter combat and long-range engagement. We've already begun testing Gold Mud in labs. From sightlines to vehicle balance to time to kill to cover.
Can you find price action on GME bonds? Yeah, it's on TradingView. If you go to TradingView and you go chart and you type Gamestop into the search, you have the I think you can just go here. I think you can click bonds, yeah. See, and then you have the only the April 2030 ones though, I think. I don't know if they have the other ones. That doesn't look right. Maybe it's these ones? Yeah, there we go. That looks better. Whether it's accurate or not, but yeah, I mean, you've bounced off 100% on these so many times. Looks like they're starting to get more volatile potentially. Because back here you were barely getting any like candles or anything. Now you're starting to get actual candles. I thought they had both of them though. But I guess not. But I mean, when was the last time you're trading at 104 on the bonds? April 14th or March 24th, March 23rd and 24th. So what was GameStop trading at that point? March 23rd and 24th. So you're actually trading, the bonds are actually lagging the stock potentially, which is pretty interesting. But the bonds probably, yeah, they probably just aren't as volatile because they do have there is like protection to being a bondholder, so they're probably not as volatile. But I'm surprised those aren't up more. Maybe they only update every now and then. I'm not really sure. I don't even know if that's like the actual price action or not. That's just the only place I've ever seen them was on that TradingView. But I thought they had both of them, so I don't know. It's kind of weird. Yeah, Alcoa earnings after hours as well. Maybe we should be streaming Alcoa. That shit's up a lot. It's like up 3x this year alone, or the past year. I don't know. Maybe we should be doing Alcoa earnings instead. How did my last Netflix stream do? I don't even think people came to my stream for Netflix last time because they do their own YouTube stream. Hey, look, a Voidzilla video, nice. Let's see. Oh, I got 3,000 views. Well, looks like we're doing Netflix. Mortgage rates coming down a little bit. But still flat overall. Some manufacturing data and some stuff I don't really want to look into. What the hell? The average the average volume on GameStop is 7.41 million. How is that even possible? How is it possible that what the fuck, dude? Isn't that so random? 7.41 million average volume. Isn't that so weird? Like, how is it? Is that what it is on Yahoo too? I don't think that's what it is on Yahoo. 7.6. How is Market Watch is memeing, bro? Market Watch stays memeing. 7.41 average volume. That's hilarious, bro. That's actually hilarious. Stay memeing. Stay memeing. Crypto's kind of up. Is it like, I haven't really been paying attention to what altcoins are going up. Doesn't look like, I mean, a lot of them are up like a little bit, but I don't know. That's kind of weird. I don't really want to look at crypto. Crypto's so dumb. Yeah, I'm sure there's some other websites you can look up the bonds. $3 billion infringement suit against Intel is opened up once more due to a U.S. appeal court decision. Euro Truck Simulator? Psh, fire. Fire. $25 was fun? What do you mean? It's still at 25. I mean, it's just short-term price action. Not really. Don't really matter much. MetaQuest headset prices are going up April 19th. Yeah, I don't think that's going to work the same way it did with PlayStation. Not much news, not much news. My favorite Market Watch moment was in 21. Market Watch made an article about meme stock / GME, and they put a tweet from a retail holder about GME, and in the article, that Twitter user changed their username to fuck Market Watch and changed their profile to a picture of a butthole, so you saw it right on the article. That's awesome. That's pretty funny. Oh shit, that's kind of funny. Snap laying off 16% of the workforce, blames AI. I don't get how Allbirds is pivoting into AI. What does this even say? Pivot its business to AI compute infrastructure with a long-term vision to become a fully integrated GPU as a service and AI native cloud solutions provider. Also changing its name to Newbird AI. Subject to shareholder approval. Company will raise $50 million from an unnamed investor to assist with the enterprise. Money will be used for acquisitions and monetizations of graphic processing units, related high-performance computing infrastructure capable to support high workloads, and other related assets. In other words, all of the things one would need to start an AI compute company. Well, yeah, that's going to be successful. Okay. Yeah, let the sardines invest in that, bro. Let the sardines invest in that. Meep. 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 Microsoft raises prices on Surface PCs due to skyrocketing RAM costs. Ugh. I hope my computer lasts for another, like, few years, because I have no desire to buy another one. Pokemon EDM show? Pikachu! Blastoise! Sneakerheads run into Pokemon and AI. Something. People are just obsessed with AI right now, which is... It just doesn't make sense to me. I don't know why. Like, sure, you know, the short-term price action, a lot of those things have gone up, but, like, when you're looking out 5, 10, 20 years, like, most of those companies are not going to be around. And even if they are, like, is the price... I talked about this during the APLD stream, like, even if they are around, is the price you're paying today going to, like, reflect the future? I don't think so. I've been doing this stock market shit for too long. Seen too many things come and go. When I first started trading on the stock market, it was all fucking weed stocks. Everyone was obsessed with weed stocks. There isn't a successful weed stock. All of them are shit. And then it was EV. All the EVs are complete garbage except Tesla. And then it was I don't remember what the next thing was, but I remember weed stocks and EV being really hyped. And then just none of them ever worked out. Except Tesla, you know? And I'm sure there's a weed stock that is up, or like maybe something like Altria or something that's a big, you know, Altria has like cigarettes and stuff like that, but they're also in the weed business. So like something like that obviously is probably doing well, but yeah, I've just seen this. I've been in this game for years. It made me an animal. There's rules to this shit. I wrote me a manual. Yeah, I've just seen too much, bro. I've seen too many things get hyped, and then next thing you know, they're just gone. Like everyone was everyone was obsessed with like work from home stuff, you know, like Zoom and during the pandemic. All those things are shit. Like, I don't know. People are crazy, bro. They're just trying to hop on the next trend in hopes that something, something's going to happen for them. And sure, they'll probably make money or something, maybe. I mean, statistically, a majority of people lose money, so anyone who says they're making money, I just, it's hard for me to believe, but when we're looking 5, 10, 20 years down the road, I have a hard time believing anyone who's investing in AI in this moment right now. If you invested in AI like a couple years ago, a lot of those stocks are up massive and you probably did pretty well. But if you're investing in AI now, I just don't think you're going to be successful. I don't think you're going to win, but I guess we'll find out. It's just a phase, I feel. I mean, AI is always going to be around, but like, I just don't think it's going to be as massive as, it's going to be massive, but there's only going to be a couple winners, or, a handful of winners. Majority of these companies are going to be shit or be bankrupt. Like, who's going to be the winners? Amazon, Microsoft, Apple, all the big names. Like, those are going to be your winners. And then sure, you have like Palantir and stuff like that, but I think you're paying way too big of a premium to be investing in Palantir, but we'll see. I could be wrong. I don't think I'm wrong. I'm usually not wrong, but I can be. It's definitely possible. Subway will give you free food for a year if you can find a meteorite. Okay. New York City cop on horseback goes viral chasing purse thief through busy street. Is there a video of it? Stop. That's my purse! I don't know you!
Stop! Please stop! Stop!
That's a slow-ass pony, bro.
Stop running!
That's a slow-ass horse.
I said stop running! Stop running!
Go, pony.
Stop!
Why would you be riding a pony? Why wouldn't you have like an e-scooter or some shit? Wait, what? How did he catch him?
Putting cuffs on you.
This guy...
You're being detained. Okay?
That guy's not very good at running away from the police. Roblox hit with 12.5 million settlement that bans adults from messaging children. Well, that's good. Real life GTA 5 house hits market for 40 million and it's a record. The real life building behind GTA Online's Eclipse Tower just listed its penthouse for a potential Los Angeles condo record of 39.5 million. 40 million for a condo? Brother. People have way too much money. People have way too much money, bro. Way too much money. I don't want the sound. Oh, it's right here. There we go. I mean, that's nice, but 40 million? I don't know about all that. What's your HOA fee on that? Like 5 bands a month or more? That's crazy. That's crazy. Liquid Death Pop-Tart collab? That's disgusting. Liquid Death Pop-Tart collab. What the hell? Pokemon collab turns original Gen 1 starters into food. Pokemon collab? With who? Oh, Pop-Tarts. I saw that. Pokemon Pop-Tarts. Dairy Queen becomes latest to use AI in drive-thru. YouTuber plays World of Warcraft using hot dogs. What the fuck, dude? NASCAR says it stopped YouTuber Cletus McFarland from racing due to safety concerns. All right, let's see. NASCAR officially denied his approval, making it clear the decision had nothing to do with popularity or viewership. Sanctioning body pointed directly to experience and driver readiness. I don't know about anything about Cletus McFarland, so I don't know if he's a good driver or not. Gamestop shitty storefronts are the perfect Trojan horse. I love it. Wait, what? You see the One Piece Popeyes collab? Yeah, I watched Penguin's video about it for like a second, but I saw it was a bunch of people were getting whatever comes with it and selling it for like $250 on eBay or something. Ridiculous. Nutello launches first ever new flavor after 60 years. Parmesan crusted water and desserts. What is this? What is the news, bro? Yesterday it was all like negative, like today it's all food. Woman wins $300K lawsuit after being served too many drinks on a cruise. What? How do you get served too many drinks on a cruise? What a pussy. I got too fucked up on the cruise. I'ma sue you. I'm too fucked up on the cruise. Hunger Games actor arrested after shooting at multiple people. There we go. That's the news I remember. There we go. Taco Bell's triple double crunch wrap returns after years of fan requests. Ugh, Taco Bell? Disgusting. Ugh. Ugh. Arc Raiders has lost almost 80% of players this year on Steam. Wow, that's crazy, bro. Arc Raiders was huge like a couple months ago. Viral restaurant owner warns life will be too hard if customers keep leaving good reviews. Esports host covers herself in black paint after criticism over revealing outfit. God, people are such pussies, dude. Why? She should have just went naked on the stream, bro. She should have just been like, look at my tits. She should have just flashed the stream. Crazy. Yeah, it's wild. I also saw Popeyes announce they were going to sell the bento box on their website like a day or two later, trolling scalpers. That's funny. What's up, Afghan? Afghan Battle Rat. What's up, bro? Hope you're doing good. Yeah, I didn't see that. That's funny, though. Skyrim mod lets you debate dragons instead of fighting them. What? Debating a dragon? That's ridiculous. Let's look at this for a second.
All with a...
I just want to see him debate a dragon, bro. Alright, whatever. Never mind then. Never mind then. Retiring pilot reported to police after surprise move on final flight. What did he do? A retiring pilot was reported to police after he went on a surprise low flyby during his final flight to Iceland. Who flew to Icelandair. He wanted to make his final flight special by pulling off a low-level flyover of the town of Vestmannaeyjar. Town the pilot grew up in, but the low-level flyover on April 11th startled current residents and left the pilot in a world of bother. Clips were captured. I want to see the clip. Yeah, I'd be tweaking if I saw that. Bro, I'd be tripping, dude. I'd be absolutely tripping, especially because it's a Boeing. I'd be like, no, it's going down. No, another Boeing. Not another Boeing. Anything else? Peyote plants in GTA Online. Oh yeah, baby. Some peyote in Grand Theft Auto. YouTube now lets you completely remove shorts from feed. Nice. Nice. Boy stuck looking like Dragon Ball Z's Frieza after mom reportedly used latex paint. Oh, rip. Rip. Clavicular had an overdose on stream, I guess. I didn't actually see it, but I've been seeing this a lot. Weirdo. You gotta look, Matt. You gotta looks max, chat. You gotta looks max. Don't get caught slipping, chat. Get your looks maxed out.
And more. We already have a lot of feedback to get the map ready for Season 3's launch next month. And we can't wait for you to get your hands on Battlefield 6's biggest map yet. And later in the season, another legendary map arrives. Cairo Bazaar.
Cairo Bazaar!
As an official mode, as well as the beginning of our ranked play experience. We're incredibly excited.
They're adding a battle royale.
Updated take on Battlefield 3's Grand Bazaar. Tight alleyways and buildings. Part of Season 3 will be introducing Battle Royale solos.
Oh yeah, baby! Battle Royale! Don't they already have Battle Royale in Battlefield? I have no clue.
Official mode. First, the Battle Royale RedSec. We're looking forward to getting your
God, the destruction looks so good on that game, man. I'm surprised I haven't played it, honestly.
Back and building this experience with you for this thrilling, including Battlefield 6 multiplayer, as we build new ways to showcase your skills in Battlefield.
In July, Season 4 will arrive. And with it, we'll now have land, air, and sea battles. That's right, naval warfare is coming to both
Naval
Battlefield 6 and
warfare.
RedSec. As
We're
you
going to fight in the sea. I hope
take
you're
the
ready to fight
fight to
sea.
the past and combat with, and that's one of the upper even
Woke Island?
There is history.
It's called Woke
Aircraft
Island?
carriers,
That's crazy.
This year, you'd like to see in Sea of Office. To hope show watchers players are dominant.
Leaderboards, platoons,
on Blackwell Fields.
New
Also, the
Sauber
Battlefield
City,
Lab,
new maps,
and Open Series.
Battlefield
as
RedSec
promised.
Elite Series,
As
whatever
a
that
holiday
is.
surprise, we'll be dropping
3 new maps in Season 5.
Battlefield. I hope this
Okay. Exciting. Exciting stuff. Oh no, it's selling off, chat! No! Oh no! It's only at $24.98. Whatever will we do? So dumb. It's going down, chat. No! You any 13Fs yet? No 13Fs. No articles to read. What a rip. The good old spreadsheet. They know what's coming. Sold my whole position when we dipped under 25. Aw, you paper-handed little bitch! Get that paper-handed guy out of here, bro. You and your paper hands, bro. Get that shit out of here, bro. You got your fucking origami swan hands over here. Fucking origami swan hands. Crazy. I'm just fucking with you. What's up, Power Ranger? Hope you're doing good, bro. Hope you're doing good. If you ain't got diamond hands, you can. You ain't got diamond hands, you can get out. Amen, amen. If you don't got diamond hands, you can get out. Good times, good times. I mean, what's gonna happen if it's up again tomorrow, though? Like, this is pretty similar price action to yesterday. You had the spike in the morning, and then you sold off a little bit, and then you ended up making another high into the close. Like, very similar price action to yesterday. I think the sell-off was a little bit earlier in the day, though. So, I don't know. The fact that it's trading at 25 at all is pretty impressive, to be fair. Wearing sweatpants just in case. Why, are you trying to show everyone how hard you are, bro? Like, dude. Oh, dude, GameStop's going up, dude. Oh. Hopefully it just keeps chugging along. Hopefully. I mean, I wouldn't mind if it pulled back again. I mean, realistically, it kind of sucks if it starts going up, because then you can't buy more in the lower 20s. So, like, it kind of sucks that it's going up. But at the same time, I wouldn't complain if it kept going up. I don't necessarily prefer it. I kind of prefer trading at the lower 20s personally, but if it keeps going up, that's perfectly okay with me. Yeah, hit that like button. We only got 3 likes, chat. It says there's like 12 people in here, but only 3 likes? That's crazy. That's crazy. Gotta be hitting that like button, chat. I don't want to be wearing tight pants and kick someone when I see that God candle hitting. Oh, if the God candle hits, bro, it's party time. It's Lambo season time. It's Lambo season if the God candle hits. When does Netflix report earnings? 4:45? Oh, that's actually not that bad. Nice. It's kind of early. I think Netflix's earnings reports on YouTube, isn't it? Pretty sure. I think they do it on YouTube. Not that one. They must have a different YouTube account. Don't they? Are they not doing it on YouTube this time? Let's see, video interview. Ah, here it is. Here it is. Okay. Have that ready. Man, what are we gonna do for an hour and a half before the earnings starts? That's a while. That's a while, man. Here we go. What's up, Gobnobber? It has been a while, bro. I hope you're doing good. I've been missing your vids for a long ass time. It's nice to be back, though. I appreciate you stopping in, bro. Appreciate you stopping in. I do post like stream clips on the channel as well. If you ever miss something on stream and maybe there's a piece of news you want to see that I covered or something. I do usually post the videos at this point. but appreciate you stopping back in, my friend. Good to see you. Netflix is the 19th most valuable company in the world. Yeah, that's wild, bro. That's sick. That's awesome. Earnings released at 4 p.m. Eastern Time. Video interview at 4:45. Yep. Well, the earnings release will be a little bit after 4 p.m. Eastern Time. Probably like 10, 15 minutes after. But maybe they'll release it right when the market closes. Maybe. Snakes, what's up, Snakes? How you doing, bro? How you doing, Mr. Snakes? Good to see you. Good to see you. All right. I don't know what we're going to do for the next hour and a half, though. Anything on Reddit? Oh, yeah, Ryan Cohen reposted the Power Pack announcement. That's cool. So yeah, I hate when I log into Reddit and there's people all excited about the stock going up. That kind of just tells me that it's probably not going to go up as much as we'd like it to. But maybe. When other people are getting excited, that makes me not excited. Usually how it goes. Damn, I started the stream too early, chat. I started the stream too early. SWAT officer slammed by sheriff for swiping on dating app during armed standoff. He's like, damn, this chick's fucking hot. Get on the ground now! Like, god damn, look at that ass. It's so ridiculous. The internet is so dumb, bro. YouTuber risked life to give North Sentinel Island tribe Diet Coke, faces 5 years in prison. Good lord. Is there a video of this? Or just a photo? Sheriff calls behavior a slap in the face to the SWAT team. Bro, he's just trying to get some ass. Leave him alone. He's just trying to get some booty. Can't a guy just get some booty? Yeah, I wish there was like a GameStop article or something to read, but there's just nothing. Still just a bunch of articles about power packs. Not very exciting. Yeah, I don't know what the fuck. I started the stream too early. That's a rip. That's a rip. There's got to be something in the news. Let's see what this Michael Burry article is. It's a CNBC. It's paywalled. Rip. Of course, they paywalled the Michael Burry article. Gotta squeeze every little penny out of Michael Burry. Same with Michael Burry himself. Did you guys see that Michael Burry is doing like trade alerts or something like that? Like, how pathetic is that? Dude is a multi-millionaire, supposedly a successful trader, and he's doing trade alerts? Yeah, I refuse to believe that. If you're a successful, profitable trader, you don't need to be doing trade alerts and selling your articles on Substack. Just not even a thing. Real profitable traders make money from the market. Highlander in 4K would be sick. Wait, what? What are you talking about? Highlander in 4K. What you talking about, Willis? You just scrolled past it. I did? Oh, this? I don't know what Highlander is. Oh, I know what Highlander is, actually. Part of the 40th anniversary 4K restoration of the 1986 cult classic will return to theaters for a limited run. The re-release will be accompanied by an all-new poster and a collector's edition UHD and Blu-ray release that hits stores June 16th. The Highlander. I don't know if I've ever seen The Highlander. I guess we can watch the Voidzilla video. That could kill some time for a second. Blizzard made Overwatch's best mode worse. What did they do? Mystery Heroes, casual mode in which you load in as a random character and automatically switch to another when you respawn. Back over 25, we're rich again. Lambo season? Bro, is it Lambo season? Is that what you're telling me right now? It's Lambo fucking season, dude? Nah, couldn't be. Couldn't be. It couldn't be, Hugh. You're telling me it's Lambo season? Again? Is it? Oh, it might be. I'll be right back real quick.
Push start, then I go. Man, it's Lambo season. If you're moving too slow, probably wouldn't ever see me. If I told you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy. Sometimes the money get to the pride, other times money don't make it to your side. Get it, then we spend it like it wasn't ours. Cause you can't take it home with you when you die. Live fast, die broke, only you decide. Outside lights off, unsupervised. Bad wings when the doors go suicide. I ain't ever been this high. Bloodshot red in my eyes. Please don't fuck up my vibe. Floating through space and time. Colors coming out of my mind. I ain't ever been this high. Push start, then I go. Man, it's Lambo season. If you're moving too slow, probably wouldn't ever see me. If I told you about everything that I've been through, probably wouldn't believe back from all that shit in the hallway, make it look easy. But still wasn't none of this easy. Let me in the cold, they ain't need me. It's funny cause I ended up freezing. The diamonds all recent. Pastor probably think I need Jesus. I just need a new account of regions. Lambo season. I ain't on my side, I'm anemic. The hard times made me uneasy. Came out the city, but it feel like the city ain't leave me. Till my heart stopped beating. I ain't ever been this high. Bloodshot red in my eyes. Please don't fuck up my vibe. Floating through space and time. Colors coming out of my mind. I ain't ever been this high. Push start, then I go. In this Lambo season. If you're moving too slow, probably wouldn't ever see me. If I told you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit in the hallway, make it look easy.
Yep. Always make it look easy, chat. Always make it look easy. Let's see. Charlie made a video about Allbirds. So let's check out Charlie's video about Allbirds. He probably researched a little bit about it. We still got like 30 minutes till Netflix starts anyway, so we gotta kill some time.
There is a cheat code floating around right now that science doesn't want you to know about. It's kind of a well-kept secret, but there is a word that can summon money. It's an ancient incantation that's starting to become a little more popularized, and basically any company that says this word gets a ton of money instantly.
I think this is funny. I love when Charlie reports on like business and stuff, because he's not really that guy, but you know, he does proper research and he's pretty he's a smart dude. When it goes below, you gotta stop the music, then start it back when it goes back over. Only 25 minutes till Jimmy sets a new high a day. You think you're gonna hit another high a day today? Maybe. It's been pretty bullish.
Instantly for nothing. And that word isn't open sesame, it's AI. As long as a company says that word, for some reason, the most brain-dead, insufferable fucking morons will pour endless amounts of money into it. Let me
Meep. Meep. Oh yeah, chat, it's literally snowing outside. I don't know if I told you guys this. I went upstairs to grab a drink and it's fucking snowing outside. Literally, like, a week or two ago, it was like 80 degrees. It was like it was summertime. Now it's snowing. Has GME said AI yet? Maybe that's what we're missing? Maybe. Alright, I'll stop interrupting the video. 80 here in New York? Bro, what? How is it 80 in New York and it's snowing where I live? That doesn't make any sense. It should be like freezing in New York. We got over a foot of snow today. Damn. That's crazy, bro. The weather has been so weird here.
show you the most recent example, and I think quite a few of you have probably seen this because it's blowing up. Allbirds, or excuse me, what was formerly Allbirds and is now Newbird AI. Allbirds was previously a shoe company. It was once valued at $4 billion and then recently sold for $39 million. They crushed it. They really, they did it. That's big business, baby. And because this was a failing brand, they made a pivot, or they announced a pivot 2 days ago that they were going to become an AI-focused company. And the second they made that announcement, their stocks shot up 400% and have only continued to climb. And keep in mind, this is a company that has nothing. They fired like all of their employees, from what I can tell. They got rid of all their shoes. They don't manufacture anything or have anything. And they haven't even begun with anything AI outside of an announcement saying, we're going to pivot to AI.
Bro, that is just wild. It's wild how dumb the market is right now. Like, it almost doesn't even seem real. Like, is there really that many people obsessed with AI the second, like, a company like Allbirds, you know, a complete trash going bankrupt company, says they're doing AI? Like, is it really like a bunch of fucking sardines going to buy it? Or, you know, is the price just getting jacked up by the market maker before that happens? I think it's very debatable, very debatable. Ryan Cohen, Canadian native, gonna come out and say, I want to talk about a new acquisition in God Kendall. Are you gonna hit it? I can't do a Canadian accent. You want to talk about a new acquisition? I can tell you all about it. I can't do a Canadian accent. That's how committed to AI they are. Come on. Kev, what's up, Kev? How you doing, Kev? It's been a while, Kev. Hope you're doing good, bro. Hope you're doing good.
So right now, people are golden showering them with tons of money off of just a thought. Literally, the concept of an idea for this company, and they changed their name to Newbird AI. That is how out of control this fucking mass psychosis around AI is, where people just instantly throw all of their money, dump in their wallet at the computer screen just because a brand said the word AI. A brand which, by the way, is not successful. Again, they sold a $4 billion company for $39 million because it went straight into the shitter over the last, like, I don't even know how many years. You see the shoe company pivoting to AI and the stock jumped 800%. Allbird. I didn't look into that, but I kept seeing that pop up on tons of headlines. Basically, it was a complete failure of a shoe company, and then they made like this announcement that they're going all in on AI to get like a bunch of, I don't even know what it was, GPUs, and like selling computation power to AI services or something. And then all of a sudden, everyone just pumped their stock. I don't know. I didn't look into it. But yeah, this felt like a very interesting thing.
Isn't it weird? Isn't it weird how Penguins is doing the videos that I do now? Isn't that weird, bro? Like, I've been watching Penguins for years, and he really never did, like, AI or stream clips where he's just, like, reading articles. Up until, like, a month or so ago, he's been reading articles more on stream and, like, posting videos of him reading articles. And I think that's hilarious because literally I've been doing that for a while now. Like, I'm not saying Penguins is, you know, stealing what I'm doing because he probably doesn't even know who the fuck I am, but like, I just think it's very odd that, you know, I've been doing these videos where I just read articles and whatever and commentate on the article, and then out of nowhere, Penguins is doing the same thing. Like, it's just so weird, bro. It's so weird. I'm just, I don't know. I might be a small streamer, but I'm definitely ahead of the curve. That's for sure.
Allbirds shares soar on a very 2026 pivot to AI. Shares of Allbirds, the 2010s pioneer of trendy sneakers, I've never heard of them, and eco-conscious millennial marketing took flight in an almost comical fashion Wednesday morning after the company announced an extremely 2026 pivot, abandoning its environmental agenda and getting into the AI business. Literally every company on the planet. The stock, which had been in the gutter since November 2021, shot up more than 600%, closed at $14.50, up 582% from Tuesday's close.
GameStop's kind of ripping, huh? GameStop's kind of ripping, huh, chat? Kind of ripping. You know that guy owns a gravity bong? Wait, what? Been back on the Geeter grind after you... What? Unintentional... Geeter? Oh, guitar. Gotcha. I was like, Geeter? What the fuck's a Geeter? The guitar. You slapping? You doing some slaps, bro? Doing some slaps? That's the bass, but...
Catalyst came from Allbirds' announcement that the company, once valued at $4 billion, would soon reemerge as a new entity with a focus on AI. What? No one's ever done this! Oh, I see why everyone started pumping it. Wow, nobody's doing that. What the fuck? Can you do that? AI, oh my god! Wow!
His reaction is so dumb. AI? AI? Nobody's doing AI. So funny. Mine's got a healthy layer of dust on it. We called Lambo season to a T. Amen. Amen. Because it is Lambo season, bro. It is Lambo season. It's about that time of year. It's going to be interesting if it doesn't sell back to the low 20s. Because you know how many people... I mean, how many people in the chat alone have we seen, like, you know, who made trades on the stock? Like, it's the easiest trade ever. You know? Like, what's going to happen when it doesn't go back down? I mean, we'll see. We'll see. Just loop Lambo season with the chart up. I'm sure we've done that before.
Essentially, it's going to buy and rent out computing power to tech startups? It's genius. Whoa! The shift comes just weeks after Allbirds sold its footwear assets and branding to American Exchange Group, which specializes in selling licensed fashion accessories with already existing recognizable brand names for just $39 million. Oh, I bet this company's gonna kill it in AI, though. They took a $4 billion business and sold it for $39 million. NFT bros are coming in their little trousers right now with those kind of returns. That's fucking business, baby. That's
Bro, I can't get... His reaction is just so funny. I don't know why.
That's the kind of company that's going to be trailblazing in AI. Again, a highly underutilized market. No one's touching AI right now. They're bucking the trend. They're going where no brands dare to go. Into an AI pivot? Fuck! These guys are brave.
I can't, bro. It's just too funny, bro. It's too funny. His reaction is just so funny because it's like, it literally embodies how I feel about AI.
These guys are so brave. Allbirds, which will be rechristened New Bird AI. Oh, God, that hurts. Eek. Yikes. Terrible name. New Bird AI. Ooh, more like No Bitches AI. Yikes. Said it executed a $50 million deal with an unnamed institutional investor to acquire high-performance GPU assets to begin transitioning into a fully integrated GPU as a service. Yes! Oh, I can't wait to hear who this unnamed investor is. Dead Parrot. Despite the stock's sudden surge, though, Allbirds remains a shell of its former self. Market value was shy of $150 million at Wednesday's closing bell. Worth underscoring, the sneakers to AI pivot is not exactly part of the standard corporate playbook, and the novelty may have amplified investors' early enthusiasm. Investors, these are just brainless drones, man. These are actual, just like, hype goblins seeking out any kind of quick pump and dump. Investors, my fucking left butt cheek. I might short.
Damn, Penguin's calling him out, bro. Penguin's calling him out. It's either AI or Bitcoin play. That's the fad. I mean, Bitcoin was the fad when it was back at all-time highs, but crypto's dead for now. Once you see Bitcoin at all-time highs again, you know, the Bitcoin fad will come back, but crypto's dead for now. Nobody cares about crypto. That's why everyone's clinging so hard to AI, because they have nothing else to cling to. This is the top meme on Wall Street Bets right now. Dude, I haven't looked at Wall Street Bets in years. I didn't even know that was still a thing, honestly. The day will come that Penguins makes a GME video 100%. I think so as well. I think so as well. He probably won't have anything good to say about it, but that's perfectly okay with me. I love that people have negative views on GameStop. It helps the investment, honestly. It makes it a better investment, because if everyone liked GameStop, it wouldn't be as interesting of an investment. But the fact that everyone hates it, that's why I like it so much. I bet these are Wall Street bots that are pumping the AI. Well, the market maker could be pumping the price of the stock because of the hype it's getting, and then people are overpaying for the stock. You know, that could definitely be a thing. It could be, you know, even though they're making it seem like retail pumped it up 400%, the market maker could have pumped it up 400%, so retail is paying like a crazy premium on the stock, you know? Greetings from the UK. What's up, Cameron? I don't know if I've ever seen that name in here before, but welcome, Cameron. Welcome.
This. I'm not like a big stock guy, but this feels like the easiest, safest short of all time. Am I crazy? I feel like everyone's doing that now, though, so it probably won't work. I imagine genuinely everyone is shorting this right now. This is just so baloney. This is just such barnacles. Still not as annoying as Crypto Bros, but it's damn close. I would say it's getting to Crypto Bro level, like very... Like, you're right, I think Crypto Bro's still more cringe, but this is like right there. Like, one little fucking pube away from that level of cringe. Because it's every company, genuinely all of them. This is a failing shoe company that all of a sudden just said, okay, we're pulling the emergency lever, AI, and then they're just getting showered with money. Apparently, Allbird was a Kickstarter company that sold shoes made with recycled sugarcane and eucalyptus. Ironically, Time magazine even praised their shoes because it reduced carbon emissions. And now look at them, fully pivoting into AI, the antithesis of that. You'll love to see it. It's a feel-good story. The name may have changed, but the values are still there. Allbird lives on in New Bird AI. Saving the world, one grok bikini photo at a time. The shift is notable for another reason. Allbird's low-profile, sustainable, wool-based shoes quickly became the Silicon Valley wardrobe staple when they launched in 2016. Arguably the peak of the lowercase L liberal do-gooder era of retail. What the hell is that? What the fuck is that? When marketers convinced upwardly that I
don't think he really...
going great lately. That's all or more.
Nervin key. So they really don't have that much information about the AI. It's just a pivot they're potentially going to make, and it still has to be approved by the shareholders, so I don't know, that's weird. That's weird. I mean, if Allbirds was smart, they would be doing an at-the-money offering and raising a bunch of money real quick, kind of like GameStop did. But I really doubt their management is intelligent enough to do that. Alright, let's watch this Voidzilla video. It's only like 6 minutes long.
Hey! You! Come on, we're starting an AI company, bro. Just come into this back alley here. Come on.
Oh, it's literally the same thing. They're just talking about Allbirds.
Come give me your money. That is honestly how it feels looking at articles like this. Allbirds is a shoe company that just announced they're switching and pivoting to AI, and their stock jumped 600%. This is just reported by The Verge. Guys, what are you doing? What are you thinking? I just want to grab some of you and go, why would you invest in this? What is the big idea? When you have the stock market go up for long enough for a while. We just hit new all-time highs after a dip in Iran. We have this like two-tier economy that's really just like a lot of people feeling like it's a recession. Most people getting crushed by inflation, getting crushed by stagnant wages. And then on the other hand, you have the stock market, which just seems to rip no matter what, basically. And I think this has led to an air of complacency. I mean, you have a famous quote from Warren Buffett that you only find out who's swimming naked when the tide goes out. The idea is that when you have a bull market for long enough, when things are going well in the stock market for long enough, investors just lose their discipline. They lose an ability to see just like basic, obvious, stupid investments. I mean, I just want to be clear. Allbirds, the shoe company, is now pivoting to New Bird AI, and they're using their initial capital from selling their old assets to acquire high-performance GPU assets. Their long-term vision is to become a fully integrated GPU as a service and AI native cloud solutions provider. You know what this honestly reminds me of is when Radio Shack became a crypto company. That's mentioned here in this article, but do y'all remember that when all of a sudden they pivoted to, we have a failing business, you know, we're gonna pivot? Like, that's a common thing to try to get, you know, shareholder interest. And we also have Atrioc. Hi, Atrioc. He says it's different this time and points out that people have been doing this since the dot-com bubble. People have obviously been doing this with blockchain forever. And it's like, how often does this work? Like on investors? Like, it usually does not go well for good reason. You can't just go from specializing in wool shoes to specializing in AI. It's like if I told you suddenly I was pivoting into heart surgery because that's a popular field. But this is a larger trend of insanity that I wanted to talk about because I just put a story out about Stretch, a stock offering 11.5% yield on your money. You know, they're making claims that they're like a money market, things like that. Well, now we have a competitor of that, Strive, has increased their annual dividend to 13%. So you could have Stretch, which pays you 11.5%, or you can go to the guy down the street. He's going to pay you even more. And backing that, hilariously, part of it is Stretch, which pays you 11.5%. So backing the stock that is paying you 13.5% in dividends is a stock that's paying 11.5%. Something tells me that math doesn't add up. So you're supposed to get 13%. Part of the collateral backing that is a stock that's paying them 11.5%. And who's posting this again? Well, it's Jeff Walton. Who's Jeff Walton? The chief risk officer at Strive. Guys, if this is our chief risk officer, I'm getting concerned, right? How high can the yield go, right? Why stop at 13%? Let's offer 15%, 20%, 30%. I mean, what are we doing here? Or you could be like Eric McNeil. He offers 5 to 10% in monthly passive income. I mean, those other guys were talking yearly. This guy's monthly, all to attract people investing. Now, what's funny about Eric McNeil is this screams, you know, unsustainable. I don't want to say the P word, okay, but it's screaming problems, right? Here's the guy right here, obviously the emblem of trust himself, right? Standing in the pink suit with the helicopter. But
you can always trust a guy in a pink suit next to a helicopter, bro. Every time.
But I DM'd him, and I wanted to talk to him about it. Now, note my DM, it's very diplomatic. I do not use any kind of aggressive language here. I just say, hi, Eric, I'm looking into your fund. Can we speak? I would like to interview you or ask some questions regarding your offer, okay? And you can see Eric McNeil on Instagram. But now, when I go to that same page, I have been blocked. I have been preemptively blocked by a guy I wanted to talk to. Do you understand that? How insane that is? I just asked, hey, can we speak? And the guy blocks me. I was not blocked prior to this. So he's offering 5 to 10%. Coffee's, I don't even say a word. I just go, and all of a sudden, hey, it disappears, right? The guy disappears. I can't find him anymore. So I just want to note that we are in a very unusual time. It's definitely not unprecedented. People often get a little crazy and honestly stupid with their money when their stocks have been going up forever. People just lose their mind. But I just want to point it out because, you know, people are excited. They say, hey, new all-time highs, you know, can't possibly go wrong. I'm going to put my money here, there. You're going to offer me 15%, 18%, 10% a month, right? But I think it's all a symbol of a larger market that's just completely, the wheels have fallen off in the regulator sense. This is a funny tweet I saw from FanDuel. They're a gambling company whose CEO, Amy Howe, told a semaphore event that federally regulated prediction markets on sports gives us an opportunity to safely reach consumers where sports betting is illegal. I mean, this is what I'm talking about. Like, there are no rules anymore. You can just offer whatever you want, right? Hey, sports betting is illegal here. Hey, what are we going to do? Here's a safe way to do it. We're calling it prediction markets, baby. We can safely reach these young men. We can sell them on the same product, but just we rename it to prediction markets. It's no longer sports betting. It's predicting the sports. So this is just the ridiculous financial markets that we're in right now. You have gambling companies getting around laws by just renaming what they're doing. You have people offering, 5 to 10% a month and blocking me when I just knock on their door. And you've got people backing a 13% dividend with an 11.5% dividend. And maybe in that world, a sneaker company trying to pivot to AI isn't so crazy. Actually, it is pretty crazy. I'm not even gonna lie. That is just
Yeah,
insane.
it's pretty.
That's all insane.
It's pretty
I'm losing
insane.
my mind here. So yeah, come on.
Yeah, we live
Come
in
on,
fucking
come on
clown
back.
world,
If you want to
bro.
invest, just come back here. It's fine. Just keep going. You'll find it.
Yeah, it's a joke. This video, the last one he posted, the fastest growing product ever, that shit's crazy, bro. Even though I already kind of knew about this, MicroStrategy's been doing this stuff for a while, but yeah, bro. I'm proud to be a GameStop investor in a world full of scammers and people just trying to make money through AI and crypto and weird like funds. It's a joke, bro. It's a joke. I'm proud to be a GameStop investor, straight up. People love buying tops, market maker pumps, retail buys, any old shit if it's moving. They're gonna be clever shoes. Maybe there's making AI shoes, Allen Iverson shoes. That's funny. Could change their name to Clever Clogs. How do you pivot to AI as a shoe company? It's because they're getting investment to become a AI company, so they're gonna use their investment to buy GPUs or whatever. But like, they're this tiny ass company. How are they gonna survive in the AI world when companies like Microsoft and stuff are literally pouring in hundreds of billions of dollars? Something like that's not gonna survive, bro. When they say investors, they mean 20-year-olds. I mean, you'd be surprised. It's probably not 20-year-olds. It's probably people like my age who are just uneducated or misinformed. Honestly. Like, I would say a majority of people in the stock market are probably around my age. So it's just a bunch of people who have years of misinformation and years of, sure, they probably have some education on the stock market or whatever, but it's not proper education. They've been following some fucking Discord guru who has been, having them be on the day trading grind for the past 3 years, whatever. So like, nobody's an investor. And the people who are investors aren't educated properly, in my opinion. There's a lot of poor education and a lot of terrible information when it comes to the stock market. So I think people just they're just trying to make a quick bag, but they don't know that probably won't work. Sounds Ponzi-ish. Go watch that other video, the fastest growing product ever from Voidzilla. That one's crazy. Greed. I mean, they just know they can get away with it. That's the crazy part. I don't know any current tin. Been a little checked out since we got the acquisition plans. What's up, Grady? It's okay to be dumb as long as you know you're dumb. That's fair. That's fair. I would rephrase that a little bit. I would say it's okay to be dumb as long as you don't act like you're smart. I would rephrase that. If you're dumb, do you know you're dumb? Probably not. Probably not. That's the crazy thing about the stock market is, you know, you make money on it's the same with gambling, you know, you make money one time. You make money one time and you think you're a fucking genius. You know, you go to the casino and you hit a jackpot or something your first couple times gambling, you think you're a genius and nobody can tell you anything else. You know, you already have that like this is how people become gambling addicts and lose all their money, is because they win the first time and then they think they're this fucking all-knowing, all-powerful being, but in reality, it's not the case. It's the same thing with the stock market. It's the same thing with the stock market. Someone could make like 10 bad trades in a row, and they make one good trade, and they suddenly think they're a genius. It is what it is, man. It is what it is. Crazy parts, there's some real dumb fucks invested in some real dumb shit and have done better than a lot of us. I mean, the past, well, maybe besides the past, like, 3 or 4 years, the years before, basically the years before 2020, 2021 were the easiest times to be an investor. You know, you could have literally invested in anything and you would have made money. I think it's a little different now. You know, maybe 20, 30 years from now, I'll have the same view, you know. Maybe it'll play out the same. But I think easy mode's done, you know. I think easy mode's over. Of course people are going to make money on some dumb shit, you know. I'm sure someone made money on Allbirds or whatever. Like, of course, you know, there's going to be the outliers who still make money through that stuff, but I think easy mode's over. Dunning-Kruger says no. You guys ever think maybe I'm retarded and everyone's just being nice to me? No, because nobody's nice to me, so. Play a third of the wheel on roulette if it's cash out time. If it hits, it's cash out time. Every time I hit the buy button. I don't think we've reached max stupid. We getting close though. Oh, I think max stupid is, I don't know, man. I think max stupid has been reached. Just remember, Senates never lose on stocks, but also never get charged with insider trading. Yeah, we don't talk about that here. Just because someone made a good trade and they're a senator or something, I don't know if it means anything. But if you're worried about what senators are doing instead of worrying about yourself and how you're going to make more money and what you're going to do, I don't know. I think you're wasting a lot of mental space by worrying about what fucking Nancy Pelosi's doing. There's a retard in every room you go in. If you don't know who it is, then it's you. I like that. It can always get dumber. True. It probably will. Retard maxing. Retard maxing. Max Stupid is the guy wearing a mask and a Corvette with the top down today I drove by. People still wear masks? That's crazy. That's crazy, bro. I didn't even know people still wore masks. I'm in New York. Ah, that makes sense. That makes sense. That makes sense. All right, there's the close to the market. The market is closed. How did GameStop end up doing? Whoops. 25.18 chat. Let's go. Let's go. You gotta love that shit. You gotta love that shit. Oh, is Netflix earnings already out? Is Netflix earnings already out? I'm gonna do a stream. I'm not gonna do like the same like stupid reaction stream clip, but I will do a stream clip and see how it goes. What the heck? Retard maxings where you hit your skull after you done your cheeks. Wait, what? Max stupid is like core and I can't define it, but I'll know it when I see it. Rory was wrong about Micron. The whole market's up, so was I wrong about Micron, or are you just lucky that the whole market's ripping? Very debatable. I also don't even think about Micron, so if you took what I said through the Micron stream and you took it seriously, I think you need to take a look at yourself. If you're worried about what I say about a stock that I don't even care about, I think you should take a look at yourself, my guy. Max Payne coming for GME. Oh, I get if Max Payne is making tens of thousands, if not hundreds of thousands of dollars, sure. Sure. I guess so. I guess our definition of Max Payne must be different. Where's the Netflix numbers? Where's the Netflix numbers here? Here's their 8K. We'll just go off of this. All right, I'll just read off this, I guess. All right, do a little stream clip real quick. Netflix just posted their Q1 results. Revenue in Q1 grew 16% year over year, driven primarily by membership growth, higher pricing, and increased ad revenue. Revenue was slightly above our forecast due to the higher than forecasted membership growth and favorable Forex movements net of hedging. Operating income in Q1 was $4 billion, up 18% year over year. An operating margin of 32.3% was up versus 31.7% in Q1 2025. Both operating income and margin were slightly above our forecast, owing to the higher than forecasted revenue. Diluted EPS for the quarter amounted to 1.23 versus 0.66 in Q1 25, up 86% year over year, above our forecast of 0.76, driven by higher than projected operating income and the $2.8 billion termination fee related to the Warner Bros. Transaction, which was recognized in interest and other income. As a reminder, the guidance... Okay, I don't need to do that part then. Let's see what the chat's talking about here. Make sure you guys hit the like button. There's over 50 people in here, and we have 10, not even 10 likes. That's crazy. Last time I taken financial advice from Roaring Quarry. Anyone who's listened to me is crushing, so I don't know. I don't know. I know you're joking about the earnings things, but if we're being realistic, anyone who's listened to me the past year or two, however long we've been doing this, is absolutely destroying. So I don't know. You know, we'll see. We'll see if that continues, but what's the Max Payne currently? I don't think they're making a new Max Payne game. I wish. I love Max Payne. That's a good game. Max Payne maxing. Max pleasure. What does a sharp drop like that mean? It could mean a lot of things. It's just short-term price action though, so probably nothing. The report is good, isn't it? I mean, if the report is good and the stock drops, it means the market probably just thinks the stock's overvalued, maybe. But it's short-term price action, doesn't really matter. Earnings is always a gamble. Yeah, exactly. In my opinion, the initial moves on earnings doesn't matter. It's, you know, how it moves the next like month or two after. It's down quite a bit though, down 9%. It's pretty big. Pretty big drop. Pretty big drop. But let's see, where did that thing go? There it is. Alright, as a reminder, the guidance we provide is our actual internal forecast of the time we report, and we strive for accuracy. Our primary financial metrics are revenue for growth and operating margin for profitability. Our goal is to sustain healthy revenue growth, expand operating profit and margin, and deliver growing free cash flow. Our full year 2026 guidance is unchanged. We forecast 2026 revenue of $50.7 billion to $51.7 billion, which represents 12 to 14% growth, driven by continued healthy membership growth, pricing, and a projected rough doubling of our ads revenue. Similarly, we're still targeting an operating margin of 31.5% for 2026, based on Forex rates as of January 1st, 2026 versus 29.5% in 2025. For Q2, we expect revenue growth of 13%. As we noted in last quarter's letter, growth in content amortization will be first half weighted due to the timing of title launches. We expect Q2 to have the highest year-over-year content amortization growth rate in 2026, before decelerating to the mid to high single-digit growth in the second half of the year. As a result, we forecast Q2 operating margin of 32.6% compared with 34.1% in the year-ago quarter. We expect year-over-year operating margin growth in Q3 and Q4 in order to deliver our 2026 margin target. Okay. I'm curious to see how this stream clip will do. I feel like the other one, you know, the ones where I pretend like I lose money, I feel like those are just like easy, simple, but GME's dumping because of Netflix. If you think GameStop's going down because of Netflix, you're, I would never take anything you say about the stock market seriously ever. So, yeah. I also don't know what GameStop's doing. I'm not looking at it, obviously. So it's pretty interesting how you care more about the stock I'm invested in than I care about it. It's pretty interesting. Maybe, like I said, maybe you should worry about yourself and what you're doing, and you should be able to find success in trading instead of worrying about what like senators are doing and what I'm doing. You know, try worrying about yourself. It might do you really good. Try worrying about yourself, my guy. I know it's tough. It's tough. It's tough to worry about yourself and focus on yourself, but you know, it might be good for you. Netflix just it might be good for you. You know, focus on yourself. An interest in other income. As a reminder, okay. Yeah, I don't think this stream clip's gonna do as well, but we'll see. Especially because it's like a minute long. Like everyone has goldfish brain who watches shorts. Like they're probably not gonna watch a minute long short. That's why the other ones we do are, you know, that's why I do them, because they're like 10-20 seconds, and even though it's you know, it's me faking like I'm losing money, it's actually gonna get views and stuff. But we'll see. We'll see. Maybe. Alright, there's that. Wait, what is this guy crying about? Streams talking about stocks and gets so mad when people call him out for being wrong or debating. Why don't you just us your positions? I have over $10,000 or over 10,000 shares of GameStop. That's my position. There you go. If that wasn't obvious by now, then I don't know. But why are you getting mad about what are you even mad for, bro? Are you sure you're natty? Are you sure you're not on trend, bro? Because I've seen you get so angry in my chat so many times. Are you sure you're not on trend, bro? I feel like you're on trend. Talking about worrying about yourself, you're literally ripping off Roaring Kitty, and the only stock you talk about being behind is GME. Yeah, because it's the only stock I buy. Duh. Am I ripping off Roaring Kitty? I'm pretty sure Roaring Kitty hasn't streamed for, well, besides the one random stream he did a couple years ago, he hasn't streamed or made videos for 5 or 6 years. And he only made what, like 10-20 streams, a few videos. How am I ripping off Roaring Kitty? I literally don't talk about anything Roaring Kitty talks about. So maybe you should get educated before you type in my chat. I don't know. Pretty interesting. Pretty interesting. I don't even talk about Roaring Kitty or anything he talks about. So that's pretty weird. That's pretty weird, bro. That's pretty weird. From Montreal, what's up, Damien? Stock will go to 120 at the end of 2026. That's chill. What's up, Ice Cube? Roaring Corey, I'm not ripping off Roaring Kitty. No, I'm not. It's just a name for the channel. Maybe you might think I'm ripping off Roaring Kitty because you're mad, but that's fine. You like I said, worry about yourself, bro. You're worried about my name. You're worried about my name on the YouTube channel. You like, bro, you need to like seriously like focus on yourself, bro. Go lift some weights or something, like for real. Like that's crazy. That's crazy. Yes, I am focused on myself. I made a name for my YouTube channel, what, a year and a half ago, because I was talking about GameStop and I thought it was funny and I thought it was interesting. Sorry that you're upset about it. If you're upset that my name is Roaring Corey on YouTube, I mean, again, learn to focus on yourself, dude. Like, you have no fucking life. That's crazy. That's crazy. And you're ruining my stream. A bunch of people are leaving because I'm talking to you and responding to your dumbass. You know, maybe you should try bringing value to the stream instead of crying because my name is Roaring Corey on YouTube. Oh no. Oh no. He has a YouTube channel name. That's crazy. That's crazy because I'm the only one watching. Well, obviously you're an idiot, so you can be banned now. You can be banned. I don't like having retards in my stream, so I think I've gave you a little too much attention. So go back to your sad life. Go back to your sad life, bro. That's fucking crazy. You're saying nobody's watching? It looks like there's a lot of people here. So, I know you're jealous because if you fired up a stream, nobody would watch you, but that's fine, bro. That's fine. Just because you're jealous, that doesn't mean you have to talk shit. The last natty, you're not Sigma. Poor people always have something to complain about. They just triggering you. What are your thoughts on Netflix? I don't have thoughts on Netflix. Now, if you were called Corey Zombie, then maybe you'd be ripping off Rob, which would not bother me either. That's funny. Living dead girl. That's funny. That's funny. Sold all my Amazon stocks for Netflix for the stock split. Bought an additional 200 at 78 for a Warner deal back out. Nice. Wait, so you're not Roaring Kitty? Nice. Always when I join Corey's talking out the trash. What's up, Rosh? What's up, Rosh? How you doing, bro? How you doing, bro? Yeah, nobody's watching, Rosh. Nobody's watching except him. Ban this, bro. Ban this, bro. And it's working. I mean, I'm not triggered. I'm just talking shit. Just trying to, you know, just talk. Still got like 25 minutes until the earnings call starts, so we're just chilling, bro. If you think I'm triggered over some loser in my chat, I mean, that's crazy. That's crazy. Yeah, see, this stream clip's not getting any views, bro. And that's why I do the fake losing money videos, because for some reason those get views. If you're trying to like spread actual information and whatever, it doesn't get views because nobody cares. Everyone just has goldfish brains and wants to watch a 10-second video. See if I could have axed him if it was mod. Yeah, like I said, I'm not gonna have any mods ever again. Unless the stream grows to a level where I feel like I need mods. You know, maybe. But I'm never gonna have mods again. And, you know, I want to axe them when I want to axe them. It's fun to talk shit to losers for a little bit, you know. But eventually it gets annoying because you just like, you know, once someone already has their like preconceived notion and they think they're right and they think they're all knowing, nothing you say or do will ever change their mind. So at a certain point, you know, it's pointless to keep talking to someone like that, but it is fun for a little bit. Don't pity anyone and never cast yourself as the victim. Yeah, I appreciate that, Ice Cube. I appreciate that. I do pity people. I pity people who are so stupid that they can't see past their stupidity. I do pity those people. I wish they could, you know, take off their fucking blinders and like see the world for what it really is and see people who for who they really are instead of just like being angry. I do pity people. Not everyone, you know, I wish people were more open-minded and not so fucking negative and ridiculous with their views. Got you locked in with a subscribe. Glad I found your site. Rock on, Corey. Have a good night. Hey, I appreciate that, Retro TX. I appreciate that, bro. I appreciate you. What's the plan? Are you waiting for the team of Nflx to speak? I mean, I'm just chilling, bro. This is just what we do on this stream. We just chill, and I already read the earnings, didn't I? I know there's a little bit more I could read here. My bad. I thought I read all this already. My bad. Been busy last days, couldn't watch. Hey, it's all good, bro. I appreciate you always supporting. Appreciate you, bro. Dude, stock just tanked $10. Damn, beats earnings again and still. Well, the stock could be overvalued. Just because they beat earnings doesn't mean anything. Some broken people want everyone else to be broken too. Yeah, that's fair. That's fair. But going on a live stream and arguing with the host and whatever, I don't think that's going to work out. Stock's dropping, gonna keep buying. Many find pleasure in the misery of others. I love stupidity. Yeah, it's true. It's true. Most people can't succeed for themselves, so they don't want to see other people succeed. And that, you know, that's perfectly okay, I guess, but you shouldn't go around, you know, talking shit. Going into people's live streams to talk shit about something you know nothing about. All right, I'll read the rest of this. We still got a little bit till the earnings call starts. Our mission remains ambitious and unchanged: to entertain the world. No other entertainment company has tried to program at this scale, for this many tastes, cultures, and languages. Warner Bros. Would have been a nice accelerant for our strategy, but only at the right price. We have multiple ways to achieve our goals, including producing, licensing, and partnering, and we're constantly seeking to allocate our resources to the most attractive opportunities to maximize the value we are delivering to our members. The landscape we are operating in is also more dynamic than ever. Streaming continues to take view share from linear. Technology is enabling a massive increase in video content from a wide variety of storytellers. There are more ways for consumers to connect to the stories they love, including through open content platforms, interactive and gaming services. Quote, premium content is increasingly defined by the viewer. The lines between entertainment on TV and mobile devices is blurring. In such a fast-changing industry and with so many consumer options, we strive to be the must-have service, the first place people go for entertainment and the last they cancel. We've come a long way since we started streaming in 2007. We're now entertaining an audience approaching 1 billion people. Hey, I appreciate the $2, Snakes. Thank you, bro. You have a good one, my friend. Appreciate you always supporting the stream. Thank you, Snakes. Have a good rest of your day, bro. Where did I... We're now entertaining an audience approaching 1 billion people, but we're also still incredibly small. We account for an estimated 5% of TV view share globally, and as of the end of 2025, we penetrated less than 45% of our total addressable market of broadband households. We're optimistic about the future of entertainment and our long runway for growth, and are focused on 3 areas to achieve our ambition. First, delivering more entertainment value and winning the most valuable moments of truth. We continue to focus the vast majority of our content budget on core series and films. A measure of our performance is engagement, which is not just the quality of hours watched, but also the quality of that experience for our audiences. In Q1, we made good progress as our primary internal quality metric reached an all-time high. We know that not all hours are created equal. When members fall in love with a title, they return to Netflix more frequently, which helps retention, and it also ignites fandom that travels far beyond the screen, boosting word of mouth and acquisition. An example of this passion was the Q1 launch of Bridgerton Season 4, 94 million views. Fans joined the stars of Bridgerton at events in more than 20 cities across the globe that even inspired 8 real-life proposals at Masquerade Balls. We saw similar passion with the Q1 return of One Piece Season 2, 40 million views. Given the franchise's multi-generational fan base, we recently announced a 3rd season of the series along with the Lego One Piece animated special and a One Piece anime series. We have an exciting slate for the balance of the year, including films Here Comes the Flood with Denzel Washington, Greta Gerwig's Narnia, and David Fincher's follow-up to Once Upon a Time in Hollywood, and series like Will Ferrell's The Hawk, 100 Years of Solitude Season 2, and Lupin Part 4. Live event programming is another example of how certain programming can deliver outsized impact. In Q1, we aired more than 70 live events, including our first regional live event with the World Baseball Classic, exclusively for our members in Japan. This massive event delivered 31.4 million viewers, becoming our most watched program ever on Netflix in Japan, and sparked our largest day of signups in the country. As a result, among the 190 plus countries in which we operate, Japan was the largest contributor to member growth in Q1. Additionally, our March 21st live airing of the BTS The Comeback Live delivered 18.4 million global viewers, reached the weekly top 10 in 80 countries, and secured the #1 spot in 24 countries. We'll further build out live events later this year with the long-awaited heavyweight fight in the UK between Tyson Fury and Anthony Joshua. We want to win more moments of truth, and we're doing that by broadening our service to include an even wider range of entertainment options, including video podcasts and games. Our launch of video podcast features new Netflix originals, as well as a curated selection of licensed podcasts across genres our members love. Pop culture, lifestyle, true crime, and sports. We'll continue to add to the podcast catalog, including today's announcement of the new original podcast from talent like Brian Williams and Evan Ross Katz. While still early, we're seeing video podcasts over-index on daytime viewing and mobile devices as indicator of the potential incremental engagement opportunity as we scale. In games, we're focusing on 4 categories: narrative, party and puzzle, mainstream, and kids games. Earlier this month, we launched Nflx Playground, our new standalone gaming app for kids. We believe kids games represent a meaningful opportunity to deliver more valued entertainment moments to our members, and we are already seeing encouraging early signals. About 10% of kids' profiles have played Nflx games, and almost half of the kids' profiles view content on mobile devices and tablets. We expect to add several more kids games in the coming months. We're also seeing promising traction for our cloud TV games. Our virtual game controller app to play cloud games recently jumped to the top of the most downloaded iOS app chart. Based on our data, we believe gameplay can have a positive impact on member retention. Okay. I need to see the stream clip that we made because I don't think it's getting views. I think I gotta go back to the fake 19 views. Yeah, I don't know. I don't know if it's worth posting a stream clip like that. It's not even getting anything. I think people like the fake losing money clips. So I'm gonna do one. I'll do a fake losing money clip instead, I guess. That's what they want. That's what they want for some reason, is fake content. Fake content, that's what they love, I guess. No, Netflix is down over 7%. Oh, I shouldn't have bet all those calls. I'm down so much money, chat. No. So stupid. I honestly hate doing those clips because I think they're so dumb, but YouTube likes them for some reason. People in my real life see those clips. I've had multiple people that I know in real life be like, I saw your YouTube clip. And I was like, that sucks. That sucks. It's terrible. Terrible content. Terrible content. Oh, Netflix is down over 7%. Oh, I shouldn't have bet all those calls. I'm down so much money, chat. No. Oh, I don't even have to edit that one. Just gotta change the boom. And also those get uploaded quick. All right. Bunch of people left. Oh well. Second, using technology to improve every aspect of our service and our business. Building on our roots in Silicon Valley, we've been a pioneer in streaming technology, building our own content delivery network, Open Connect, and delivering a best-in-class discovery experience through personalized recommendations. Over the next few years, we'll continue to leverage technology to create a more personalized, more immersive, and more interactive experience for our members. In addition to continued innovation on our new TV UI, after a period of testing and iteration, we are launching an updated mobile experience at the end of the month that includes a vertical video discovery feed. This redesign will better reflect our expanded entertainment offering and make it easier for members to engage how and when they want. We've been using machine learning and AI for many years, and as the technology advances with Gen AI, we continue to find new opportunities to deliver an even more seamless experience for members and expand possibilities for storytellers. This includes using Gen AI to improve recommendations for members through deeper content understanding so we can recommend the right title at the right moment, test controversial discovery experiences, and improve the breadth and quality of our promotional assets. Leveraging Gen AI, we are enabling our creative partners with more and better tools to help them tell their stories, with the potential to make our single largest area of spend content even more impactful. To accelerate this opportunity, in March we announced our acquisition of Inner Positive, the filmmaking technology company founded by Ben Affleck that develops AI-powered tools built by and for filmmakers. Third, improving our monetization. Better monetization enables us to invest more in content and the product experience, which increases member value and engagement, and in turn supports long-term revenue and profit growth, and our ability to reinvest to further improve Netflix. Driving a virtuous cycle, we deliver industry-leading monetization through a combination of broad distribution, increasingly sophisticated plans and pricing, and a growing ads business. Our distribution partnership with CE manufacturers, ISPs, and MVPDs extends the accessibility of our service around the world. We've recently found success with new types of partners like Mercado Libre in Mexico and Brazil, where bundling Netflix with their e-commerce loyalty program deepened our penetration and complemented our healthy organic distribution in these countries. Our plans and pricing strategy allows us to offer consumers a wide range of options to suit their needs. Recent price changes have gone well, reflecting the strong and increasing value we provide, and today we announced price adjustments in Spain. Building out our ads business has been a major monetization priority, and we continue to make good progress. Our ads plan, priced at $8.99 in the US, remains very popular, representing over 60% of all Q1 signups within our ads countries. We'll launch new products throughout 2026 to help advertisers assess the incrementality of their buys on Netflix, all verified by Netflix trusted first-party data. Our improved capabilities are attracting many new advertising clients. We now work with over 4,000, up 70% year over year, and we continue to expect $3 billion in ad revenue this year, up 2x from 2025. In summary, the entertainment industry remains extraordinarily vibrant and intensely competitive. Today, our competitive set includes Alphabet, Amazon, Apple, Comcast, Disney, local media companies around the world, Meta, Roblox, and TikTok, to name a few. We believe we have a meaningful advantage as we strive to become a must-have service for consumers, a strong global brand, a wide range of high-quality programming, a best-in-class product experience, and a frequent role at the center of culture. Given our global footprint and deep engagement, we believe we provide superior monetization model for the content we offer, making us a more attractive partner for creators and licensors. To maintain these advantages, we need to keep building out our brand, audience, engagement, and monetization so Netflix remains the home for the best storytellers and the default place where consumers choose to spend their entertainment time. In such a dynamic environment, we've learned that the best thing we can do is get better faster than the competition. And we got a little more here. Let's see. Cash flow and capital structure. Net cash generated from operating activities was significantly higher in Q1 2026 versus Q1 2025, totaling $5.3 billion compared to $2.8 billion in the prior year. This increase was driven in part by a $2.8 billion cash receipt from the Warner Bros. Related termination fee. As a result, free cash flow rose to $5.1 billion in Q1 2026, up from $2.7 billion in Q1 2025. We now expect 2026 free cash flow of approximately $12.5 billion, an increase from our previous projection of $11 billion, due primarily to the after-tax impact of the Warner Bros. Related termination fee. We continue to expect an annual cash content spend to amortization ratio of 1.1x. Our capital allocation approach is unchanged. We first prioritize reinvestment in the business, both organically and through selective M&A, while maintaining liquidity and then returning excess cash to shareholders through share repurchases. We ended the quarter with gross debt of $14.4 billion and cash equivalents of $12.3 billion. Our cash position is more elevated than normal due to the pause in our share repurchase program during the Warner Bros. Transaction and the subsequent receipt of the deal termination fee. As we indicated, after declining to raise our offer for Warner Bros., we resumed our share repurchase program. During the quarter, we repurchased 13.5 million shares for $1.3 billion, leaving $6.8 billion remaining on our existing share repurchase authorization. Governance. Reed Hastings has informed us that he will not stand for re-election to our board when his current term expires at the annual meeting in June. In order to focus on his philanthropy and other pursuits, Reed built a culture of innovation, integrity, and high performance that defines who we are today. His vision, leadership pioneered how the world is entertained, and his legacy and impact are not only felt by all of us at Netflix, but by audiences around the world. On behalf of the board and our shareholders, we extend our deepest thanks for his extraordinary leadership and service. Reed Hastings, Netflix co-founder and chairman, said, "Netflix changed my life in so many ways, and my all-time favorite memory was January 2016. We enabled nearly the entire planet to enjoy our service. My real contribution at Netflix wasn't a single decision. It was a focus on our member joy, building a culture that others could inherit and improve, and building a company that could be both beloved by members and wildly successful for generations to come. A special thanks to Greg and Ted, whose commitment to Netflix's greatness is so strong that I can now focus on new things." Ted Sarandos, Netflix co-CEO, said, "Reed has been a singular source of inspiration for me, personally and professionally, since we met in 1999. I've had the privilege of working for and alongside a true history maker, and I look forward to marveling at all he will do next. He has modeled for Greg and me as a selfless, disciplined leadership style that will continue to shape how we lead Netflix in the exciting times ahead." Greg Peters, Netflix co-CEO, said, "Reed will always be Netflix's founder and biggest champion. He is a part of our DNA. His vision, entrepreneurship, and steadfast commitment to our values have shaped every stage of our journey and continue to shape how Ted and I lead Netflix today." Well, there you go. There you go. Yep. Crushed it. Crushed it. Okie dokie. Whoops. Now the earnings call should be starting any minute now. Wait, didn't someone say GameStop was down or something? Doesn't look like it. Oh wait, it was that guy I was arguing with, huh? Weird. Weird. All right. See, watch. I bet that stream clip I just posted is doing relatively well. Yeah, it's already doing way better than the other one. It doesn't make sense how I can make fake content and it does good, but then you try to make something real and it just doesn't matter. It just doesn't matter. If someone donates $100 to the stream, would you shave your head bald? No.
Good afternoon and welcome to the Netflix Q1 2026 earnings interview. I'm Spencer Wong, VP of Finance and Capital Markets. Joining me today are co-CEOs Ted Sarandos and Greg Peters and CFO Spence Newman. As a reminder, we'll be making forward-looking statements and actual results may vary. We'll now take questions submitted by the analyst community and we'll begin on the topic of our results and outlook. The first question comes from Robert Fishman of MoffettNathanson. His question is, can you speak to your full year margin guidance and how it compares to prior guidance with the Warner Brothers deal costs? And beyond content spending, where else are you accelerating investment in 2026?
Perhaps I can kick this one off and just sort of step back and do a little bit of high-level framing. Of course, it's early in the year. There's still plenty of time to go, plenty of work left to go do. But we've seen really good progress so far in this first quarter that builds on the solid momentum and results from 2025. So given that, we are maintaining our guidance, our strong outlook for organic growth that we established for 2026. That's revenue growth of 12 to 14%, operating margin at 31.5%. That includes roughly doubling the advertising business to about $3 billion US. Now, we ended last year with more than 325 million paid members, and as that number continues to grow, we are entertaining an audience that is approaching 1 billion people, which is an exciting milestone to strive for, and it'll be an exciting milestone to achieve. But even given that number, we still have plenty of room to grow into our addressable market. So if you look at it from a addressable household perspectives, that have good data, that have a smart TV, all those things that we think are enabling, we're still under 45% penetrated in terms of that number. We think that number is roughly 800 million, and it grows every year, obviously. We've captured about 7% of addressable revenue. This is countries and categories that we currently directly participate in. We now estimate that's $670 billion US as of 2026, and that number grows, of course, year over year as well. And we estimate that we account for only 5% of TV view share globally. So you can pretty much use any measure and say we've got tons of room for growth still ahead of us.
Yeah, and I just add, Greg, looking ahead, we're focused on 3 big priorities. Number one, to deliver even more entertainment value for our members. And we do that by continuing to strengthen our core offering, series and films, originals and license. But we also are pushing into new categories that are really exciting. Like our further expansion into podcasts. We announced a few exciting new ones just today. We're adding more regional live sports events, like the incredible event we just did in Japan with World Baseball Classic. And we're growing our games offering, including a brand new kids gaming app. Number 2, we're leveraging technology to improve the service, from how it's delivered to how to find great things to watch, and now even how content is created and produced. Number 3, we're improving monetization. And we're doing this through a combination of broad distribution, mostly organic, but also supplemented with some great partners. We have increasingly sophisticated pricing and pricing plans. And we have a great and growing ad business, as Greg just said. These features help position us to deliver, multi-year growth. We think beyond the 12 to 14% that we expect to deliver this year. At Netflix, we embrace change. We thrive on competition. We stay focused on constant and consistent improvements. All the things that make us faster and better than the competition in whatever form the competition takes. So we really feel great about the business, about the organic growth opportunity ahead, and we are just as energized as ever to achieve our mission to entertain the world. Spence, maybe you could talk a second about the WB deal costs and the guide.
Oh, yeah, sure. Thanks, Ted. So with respect to the Warner Brothers deal and those costs and how it impacts the guide, so you may recall back in January, our initial forecast, our guidance for the year was carrying 275 million of kind of cost for M&A related activity. But that wasn't just Warner Brothers, actually. So one thing that we were carrying in there was the Interpositive acquisition. It wasn't announced yet, but it was in our guidance, and that carries through also through our OpEx. So that's kind of hitting our operating margin. And for Warner Brothers specifically, even though we obviously walked away from the deal, and some of our initially planned costs for the deal, they won't fully materialize, but also some that we were planning to carry into 27 were pulled forward into 2026. So when you kind of put all that together, we're still in the ballpark, frankly, of the total that we were projecting for M&A related expenses in the year. There's no material impact on our operating margin outlook. And as a result, that there's not a reflection of some increase or acceleration in other expenses in the year.
Thanks, Spence. Thanks, Ted. Thanks, Greg. Well, following up on that question, we have from Sean Diffley of Morgan Stanley. His question is, what have been your biggest learnings from the Warner Brothers experience? And does it in any way change your appetite for M&A or capital structure going forward?
So at the risk of being a broken record here, I just want to remind you that we said this from the beginning, that the WB deal was a nice to have, not a need to have. We were very confident in the core business. So we really looked at this going into it, that our biggest risk was losing focus on our core business while we were working on the transaction. So as you can see from our Q1 results, we did not lose focus. We were very encouraged by the team's ability to stay focused on our core business while exploring this opportunity as well. Historically, we've been builders and not buyers, so there were certainly questions internally and externally about our ability to do a deal of this size. What we did learn, though, was that our teams were more than up to the task. We've learned so much about deal execution, about early integration. We're really proud of the teams that did all that work. We were proud to win the bid. We are confident in our ability to get to the finish line with regulators for the approvals that we needed. But mostly, we really built our M&A muscle. And the most important benefit of this entire exercise, though, was that we tested our investment discipline. And when the cost of this deal grew beyond the net value to our business and to our shareholders, we were willing to put emotion and ego aside and walk away. And doing it at this level, I think, sets up our teams to understand that that's the expectation of them day to day. I would like to add, though, that we met a bunch of great people in the WBD during this process. So if there's any emotion in all of this, it was the disappointment of not getting to work with those folks. And we are really looking forward to that. We do come through this with no change in our capital allocation philosophy. We invest in the business both organically and opportunistically with M&A, like you just saw with Interpositive. And we do that while maintaining strong liquidity and returning excess cash to shareholders through share repurchase. So M&A for us remains a tool to help us achieve our goals. And as you can see with the WB deal, we'll remain very disciplined in how we approach it.
Thank you, Ted. All right, I'll move us along now to the next topic, which is on engagement. And the question here comes from Vikram Kesavabotla of Baird. The question is, last quarter, you shared that your primary quality metric for engagement achieved an all-time high in 2025. How is this metric performing so far in 2026? What are some examples of the data points that inform your measurement of quality?
Sure, I'll take this one. First, just to note that volume of engagement is still relevant. We still track it. We still seek to grow it. And actually, in Q1, view hours were up at a similar rate of growth to what we saw in the second half of 2025. And that's actually despite having the Winter Olympics, 17 days of robust streaming competition land in Q1 as well. But as we said, and as you're alluding to here, while view hours are important, it's actually just one of several metrics that we look at, and we're increasingly trying to make that a more sophisticated view. Member quality is an important part of that increasing sophistication in measuring our performance, and it's got several associated signals. And in Q1, that primary member quality metric that you referenced, it hit another all-time high, so we're making good progress there. We're excited about that. I am not going to detail how we compose our metrics because they often take quite a time and quite an effort to actually build them and to prove them out. I'm sure our competitors would like to get that cheat sheet, but we're not going to give it to them. But I will say this, that we build confidence in our metrics, and specifically this member quality metric, as well as assess how we evolve and improve those metrics over time by evaluating their predictive and explanatory power to really important primary metrics like retention. So that's why we are clear that improving that number improves the business. And expanding on this, I would say as we invest into new forms of content, we also have to learn how the new programming provides different kinds of value. I think live is a really great example of this. It often drives really significant viewing value for members, albeit with fewer view hours than perhaps a scripted series. It's also got different acquisition characteristics. So these are all things that, we have to continually understand better. We have to build models for how that programming matters to our members. We got to figure out how that supports the business. And then, of course, we can bid appropriately based on that.
Thanks, Greg. Our next question on engagement comes from Rich Greenfield of Lightshed Partners. Nielsen adjusted their methodology. The end result was lower streaming viewership and higher broadcast and cable viewership, albeit the trend lines were similar. Nielsen has delayed implementing these changes into its monthly gauge report until 2026. The base of Netflix viewership will be lower, but also have more room to take share. Curious how you think about the coming impact, especially on your advertising revenue.
So Nielsen's methodology change in the gauge reporting is a change in how they calculate the national TV universe. So it's not a change in how people actually watch TV. It changes Nielsen's numbers, and those are really a methodology change. They're not reflecting any actual viewing behaviors. It's just simply a change how they think about relative viewing methodologies. So specifically, the new approach, just again, the details, reduces the weight of streaming-only households. It increases the weight of linear households, which makes streaming look smaller and broadcast cable look larger on a relative basis as they measure and report. Now, of course, we have the actual data on how much members stream. We include that in our engagement report. I think that methodology is very straightforward. Other streamers have started to measure views in that same way, so just note that. Turning to the question of how does this impact our advertising, the Nielsen gauge is not the currency for the video marketplace. And given that there's no change in consumer behavior or amount of viewing related to this shift, none of this changes our effectiveness or our aspirations in the ad space. We continue to expect to deliver that $3 billion in advertising revenue this year. We haven't adjusted that target. On your point about growth potential, really independent of this shift, we still see tremendous upside in the business and being able to win more moments of truth, especially the most valuable moments. And with our current position of being less than 5% of global TV time, or any other credible measurement out there, really, which doesn't change that number that much, we've got just a ton of room to grow in this space.
Thanks, Greg. We have several questions that have come in about our content and content strategy. The first, I'll begin with John Hoodlick of UBS. Any details you can share about the World Baseball Classic viewership? Are there other similar sports and live event opportunities out there that can appeal to a global audience and drive engagement?
Well, thanks for asking, John, about the World Baseball Classic, because it was a hit. It was amazing. In fact, it was the most watched program we've ever had in Japan. It is the biggest global baseball streaming event of all time. It was 31.4 million viewers. It was really exciting to see how this played out. And events like this are super important because they, as Greg was just saying, they really drive outsized business impact. And they're kind of a proof point that all engagement is not created equal. For those few days, that it was really an incredible time for our members in Japan. But the WBC drove the largest single sign-up day ever in Japan. And Japan led our Q1 member growth around the world. And Japan had its highest quarter of paid net ads in our history. It's also it was the first big regional live event for us outside of the US, which was great. And we got to flex a new muscle here, really, which was, streaming multiple games concurrently. So a big expansion of our capabilities. It's very, very exciting. So we were excited, the fans were thrilled, and the leagues were super excited. So yes, much more to come.
I think also a great example of how we were firing on all cylinders cross-functionally. So whether our marketing teams, our partnership teams working to make sure that, we're bringing this to Japanese consumers in a friendly way. It was really impressive to see everyone organize around that.
And a great shot in the arm for our ad sales group in Japan.
Totally.
One other thing on it, not to dismiss WBC, but also just thinking about it because it may, for as great as it was, and it was great, you may notice that APAC was our strongest FX neutral revenue growth market for the quarter. And it wasn't just because of this. Actually, we had really strong performance in a number of areas in APAC. We had a great quarter in India. Really strong quarter in Korea. Southeast Asia had showed strength. So just want to kind of make the point across the board in APAC, we executed. It wasn't just one title, one country.
Yeah, and I'd say too that it was exciting to see people pick up on recent original series. So that viewing went up. You saw some of those shows pop back into the top 10. The success of One Piece on the heels of the WBC too. So it was a really great time, for the content, and it all just came together with that gigantic halo of the WBC.
All right, I'll take the next question from Robert Fishman of MoffettNathanson. His question is, with the NFL in the market for new packages, do you judge ROI on live event content spending the same way as scripted content, or does adding NFL games give you the ability to drive higher CPMs and ad growth that one-off scripted shows wouldn't be able to deliver?
That's a great question, Robert. I mean, I'll take a step up, which is, first of all, our sports strategy is pretty much unchanged. We're most interested in those big breakthrough events, less so in the regular season packages. Everything we pursue has to make economic sense in the ways that you just talked through. And when we consider this, we have to consider all the benefits that you derive both from the viewing and from the ads business. So the reminder, sports is an important piece of our live strategy, but that strategy also includes other big live events. We had Skyscraper Live, the Star Search reboot with live voting, which was really exciting, the BTS comeback concert. But sports is an important component of that live business. And we've had a number of successes there, including our opening night MLB baseball game with the Yankees and the Giants, our Christmas Day NFL games, some big fights, the WBC we just talked about in Japan. And the NFL is a great property, and it delivers value as part of our total offering. And we are in discussions right now because we think there's an opportunity to expand the relationship. But overall, it's within the same strategy, focused on creating big events for them. We've learned a lot about what works and how to value the NFL and live generally over the last couple of years. And this is going to inform how we have those discussions and help us be even more disciplined about it. I'd point out, the event strategy is working. We've announced Tuesday we have a multi-year deal with CONCACAF for rights in Mexico, and that's in addition to like Women's World Cup in U.S. and Canada, our first big global M&A event with Ronda Rousey and Carano. So this is we're ramping up our sports events globally and local for local, both in terms of volume and profile. But we really do this because I think we bring a lot of value, we receive a lot of value, but most importantly, our members receive a lot of value.
Thanks, Ted. Our next question comes from Peter Supino of Wolfe Research. Help us better understand your business model in podcasting. I think he means probably business strategy in podcasting.
Yeah, look, I think we talked a bit about it in the letter, but I think what's most exciting about it, even though it's very early days, what we're seeing is some data that would indicate that we're gaining incremental engagement to the platform. And how do we know it's incremental? Well, two things really jump out. One is the daytime viewing. So podcast consumption indexes to daytime hours on Netflix, which now allows us to capture a time where we historically have less engagement during the day. The other one is that it indexes much more mobile. So podcasting being more mobile than professional TV, and professional TV and film historically makes up a pretty small percentage of mobile viewing. So it's great that we get to meet our members where they are, even when they're enjoying other forms of entertainment. So that's really a thrilling early sign. And we've been building out a great lineup of podcasts, both licensed and owned. Shows like the Bill Simmons podcast, The Breakfast Club, Therapist from Jake Shane, which I've been waiting to say all day. Pardon My Take. All these are doing great. And we have our own podcasts as well, like The White House with Michael Irvin and The Pete Davidson Show. Our companion podcasts have been great for super fans, like the Bridgerton official podcast and a few others. And then just today, we announced new podcasts from Brian Williams, from Evan Ross Katz, from Stephen Su, Ellison Barber, David Kwong. So the list keeps growing, and it's very promising.
Great. We'll now shift over to the topic of advertising, and this question comes from Dan Salmon of New Street Research. Can you share more on the growth of your total advertiser base? What proportion of advertisers are being serviced directly by the Netflix sales team? And what proportion are buying on Netflix through third-party DSP partners? Are you still largely focused on the top 500 brands, or is a mid-market strategy beginning to emerge? So about 5 questions in one there.
We'll do our best to handle them all. So maybe just start with, as we've mentioned before, the biggest benefit we got from moving to our own ad tech stack is just making it easier for advertisers to buy on our service. And then additionally, we've added more and more DSPs, which of course are more ways to buy. And we're seeing through that pretty significant growth in programmatic, which is on its way to becoming more than 50% of our non-live ads business. So due to those moves, as well as things like improving go-to-market capabilities, more sales force, continue to build out our ads products, more attractiveness in those products, our advertiser base grew over 70% year to year in 2025 to be more than 4,000 advertisers. So we've seen a pretty good expansion of that advertiser base, which of course is a key indicator of the health of that business. Today, we're still currently concentrating in those top advertising accounts, the largest buyers, which are serviced primarily by the Nflx sales teams. That could be directly through our stack, or basically a sales team driving buying behavior through DSPs. Either of those, those are not separate, let's say. And over time, we expect continued growth in that number of advertisers. We're clearly pushing in that direction. We think we're going to see percentage of advertisers who buy programmatically increase, and therefore the programmatic share of ad revenue will go up as well. And as we scale programmatic and our advertiser base broadens further, of course, we're going to be able to follow this pretty, fairly standard modern time-tested model of expanding iteratively into larger and larger pools of advertisers.
Thanks, Greg. Let's see. I'll move on to a question around plans and pricing. And this one comes from Vikram Kesavabotla, Baird. What informed your decision to raise subscription prices in the US recently? What are your early observations regarding the impact on customer acquisition and churn in the region?
This change was part of our plan for some time. We are continually monitoring signals from our members, things like quality weighted engagement, plan selection, plan moves, retention, which is industry leading. So we see improvements in value delivered to our members well in advance of making a price adjustment. And those same signals inform this and frankly, all of our price changes. So as a reminder, our initial full year guidance factors in the pricing adjustments that we expect to make throughout the year. And those are almost always all of the pricing changes. It's very rare that we have an unexpected or call it surprise pricing change. So that guidance factors in everything that we're planning on doing. As for the most recent changes, the early signals we're seeing are in line with our expectations. They're similar to the performance that we've observed historically with price changes in the United States. So this is, based on early data, the rollout's still ongoing. So a caveat that, but I would say all the indications that we see are consistent with what we've seen before. And worth noting that also consistent is our pricing philosophy. We haven't changed that in quite some time. We look to provide more and more value to our members, invest the revenue that we've got successfully and well. Occasionally, when we've added more value, we ask our members to contribute more so that we can invest that into delivering them even more entertainment value. And we think we are delivering one of the best entertainment values that has ever existed. And as a comparison point to support that statement, in the US right now, Nflix subscribers are paying the least per hour of viewing compared to other SVOD offerings. So in some cases, you'd have to pay 2 times per hour to get a competitive service. And our ads plan at $8.99 in the United States, we think is a great entry point, highly accessible, and an incredible value. So, we're excited about keeping all of those intact.
Maybe just Greg, just to add to that kind of that value we're delivering and kind of how we see it in the metrics. I just think of the retention that we're seeing in the business, that kind of the churn factor, the opposite of strong retention. We saw it across the board this quarter. Every region was better year over year. So that's really encouraging in terms of the value provided, which also speaks to a little bit earlier when you talked about our kind of primary engagement value metric, where we had kind of a record in Q4 of last year, a record again in Q1 of this year, which is playing out in the numbers.
Thanks, Spence. Couple questions on gaming. The first of which comes from Eric Sheridan of Goldman Sachs. You are in your 5th year of the gaming strategy. What have been the key learnings over that period? How do platform games change user consumption habits, what do you see as the most interesting areas to invest behind gaming in the coming years?
Yeah, I think platform games just means games on our platform. But let me just start by zooming out and saying, why are we doing this? At the highest level, we really see this as a significant market opportunity. It's about 150 billion in consumer spend, ex-China, ex-Russia. That doesn't even include ad revenue. So just in the current model and the ways that we're operating, that number is getting bigger as well. So large expansion potential, and where we see a significant part of that market is facing issues like new player acquisition or low friction game discovery and play that we believe we are well positioned to improve. So we've been building foundations. This is, the ability just to develop games, to bring games onto our service, connect those games with players, give players high quality experience. And just as we've seen with film and series, and just as we hypothesized, and I think you might say is, sort of obvious, but we have learned that gameplay can have a positive impact on member retention, as well as driving acquisition, although the observed effect of that acquisition has really been small to date, which I think is consistent with sort of our maturity or expectation amongst consumers as a gaming platform still. Now, a key user dynamic that we have observed repeatedly is that delivering a fan of a film or series an interactive experience in that same universe, it not only extends the audience's engagement, but it also creates this synergy that reinforces both mediums. So the interactive and the non-interactive side both do better. It further drives engagement and it delivers more value. You asked about interesting areas that we're investing in. A few of those games that reflect our other beloved IP or events and giving fans interactive experience that extend those universes. That's a key focus. Games on TV. This is a new canvas for players and for game developers. It's exciting to be able to expand the market opportunity in that way, as well as kids and providing a dedicated experience for them. So given all that, though, I think, it's worth noting that while it's, we've been a couple years in building this, we're still really just scratching the surface today in terms of what we can ultimately do in this space. We've been building a bunch of infrastructure, a bunch of core capabilities, but now we're increasingly able to deliver more and more the kinds of experiences that we were originally thinking about that move us toward our vision and our aspirations. So there's tons more work to do for sure, but it's fun to get to this stage, and we're excited about the potential we see. And I believe you'll see some increasingly interesting releases from us in the year to come. But having said all that, we're going to continue to ramp our investment, which is still currently small relative to our overall spend on content based on demonstrated performance and growing returns to the business.
Great. And Greg, a follow-up question on games from Brian Pitts of BMO Capital. The recent announcement of Netflix Playground is seemingly one of your biggest moves into the video game space to date. Would you help us understand how you will measure success with Playground and the incremental value you expect it will drive for your broader subscriber base? Maybe start with just explaining for folks what Netflix Playground is.
Yeah, great. I was going to go there as well. Thanks. But Playground is essentially a separate app for games for kids. And kids really represents one of our 4 key focus areas for games. We've got kids, we have narrative as well, and then we've got party/puzzle games, and then mainstream games. And our goal here is to become a destination where kids' favorite worlds come to life through games and through interactive experience. Now, this represents the sort of extension of a long history we've had. We've always viewed kids as a special audience. They deserve special care. We provide kids with a dedicated experience. We provide parents with tools that ensure they have control and can determine what's appropriate for their kids. These include tools like ratings, like parental controls, pin controls, etc. So Playground, this separate app, extends that core philosophy into games. It includes things like a growing collection of kids' games in one app so they can navigate between those. It's fully curated, age-appropriate titles based on beloved shows and movies. Think Peppa Pig, Dr. Seuss, Bad Dinosaurs. No ads, no in-app purchases. It fits also with kids' natural viewing habits. So a significant portion of kids' viewing already happens on mobile and tablets. So this, happens in the same place. And this is all as added value included in your membership already. Now we're seeing some encouraging signals with kids games. As we've added more kids games, we've seen strong growth and engagement through both new titles as well as improved discovery on titles that we had before. So that's exciting to see. And then ultimately, we see an important long-term opportunity to deliver more entertainment to kids in ways that parents feel good about, not just across games, but across TV and film as well.
Thanks, Greg. Let's see. Next question from Eric Sheridan of Goldman Sachs. Entering 2026, how would you characterize the current competitive landscape for content? Are you seeing any differences in competitive intensity by geography, language, and/or format?
Well, first of all, competition is not new for Netflix. Consumers have always had incredible amount of choices when it comes to entertainment. And we've continued to grow, as kind of what Greg said earlier, by offering enormous value to our members. And we grow against other services who are launching against us all over the world. Now, great projects are immensely competitive, and they remain so. And those are the projects we want. So we've been pleased that Bella and the content team have been able to land some of the most competitive projects recently, like Strangers with Gwyneth Paltrow attached to star, which is this great, incredible New York Times bestselling book that everyone was after for the adaptation. Rabbit Rabbit with Adam Driver, which is going to be directed by Philip Barantini, who directed Adolescence for us. Incredibly competitive project that we were able to land. And I'd say I'm really proud of the team, but also it's not just about paying the most, because relationships really matter, particularly when there's a lot of competitive choices. So providing a great experience for creators, delivering a big audience for them. This is hard work. So they want people to see it. Delivering a ton of buzz, which is what we do constantly in the work that we do. And we're seeing a lot of repeat business, which is an ultimate sign that we're doing our job well here. This week, today actually, Beef Season 2 starts. And if you look at that project, the show's creator, Sonny Lee, he did the first season. It was the most honored limited series of the year when it came out 2 years ago. 45 individual awards, and it was a massive hit for us all over the world. We just did an overall deal with Sonny, so he's going to be creating for Netflix for years. And that cast, Oscar Isaac, he just starred in Frankenstein. He was Golden Globe nominated for that performance. He's got another film coming out this year and another project that we just greenlit with Oscar. So we're thrilled about that. Carey Mulligan, who's done multiple projects for Netflix, including her Oscar-nominated performance in Maestro. She's in Narnia coming up later this year. She was in Mudbound. She's in Dig. We love working with Carey. She's a genius. Charles Melton, who was a Golden Globe nominee for May, December. Incredible in the new season of Beef. Even in Callie Spani, who was just in Wake Up Dead Man. So like the whole cast is like Netflix family. So I think that's a really good sign that we're doing something right. Running Point comes out next week. It's another new hit series with Mindy Kaling, who we've worked with steadily, who we love the relationship, and we hope she does too. And it's not just happening in the U.S., by the way. Alex Pina, who created La Casa de Papel, has done a bunch of multiple projects since that show, and including one he's working on right now. So if repeat business is a sign of success, I'm really excited about what we're doing. But I also think about competition in the terms of the folks, not just who we're competing for projects with or competing with for members with, but we're also a customer to most of these folks. So, Running Point is produced by Warner Brothers for us. We license shows like Watson and Mayor of Kingstown from Paramount. We have a pay one deal with Sony. We have it with NBC Universal that includes DreamWorks Animation and Illumination. Our investment in those films and in co-productions and in licensing actually feeds the entire movie ecosystem around the world. So while it's a little unusual to have, to be the customer and the competitor, it's not that unusual in the entertainment business, and we manage those relationships pretty well.
Thanks, Ted. Eric Sheridan from Goldman also has another question, this time on AI. How does the company's approach to the role AI can play in the creative process continue to evolve? With the announced acquisition of Interpositive, can you discuss the decision around that deal measured against your broader strategy?
Well, in general, we expect Gen AI to help make content better and better. Better tools, better processes. And I think Netflix is going to remain at the forefront in the exploration and the innovation of AI in the creative process. Given our technology DNA, we have a significant and unique data assets here. We have tremendous scale. So we see that as all, great opportunities to leverage new technical capabilities across every aspect of the business. So I think, AI is going to deliver benefits for our members, for creators, and for our employees. So on the content side, specifically to your question, it takes a great artist to make great art, and AI won't change that. But AI will give those artists better tools to bring those visions to life in ways that we're just scratching the surface on. So, today our talent leverages these tools for things like set references, pre-visualization, visual effects, sequence prep, shot planning. All of these things, by the way, also improve on-set safety, which is something that's not talked about enough. And this is all just the beginning. With our acquisition of Interpositive, we think it accelerates our Gen AI capabilities because it's a proprietary technology that was created specifically for filmmakers and specifically for filmmaking, and thus, different than other Gen AI video applications. So while our ownership of Interpositive is very new, we have generated a bunch of interest with our creators who spent time with the tools, and we're seeing real momentum build around adoption.
Maybe just to pick it up,
Yeah, please.
From there, I would say, Ted mentioned these, what are the factors that inform where we think we should be developing technology, where we have a differential or unique capability to invest in generative AI to deliver returns to the business. And, data, the uniqueness and scale of data is a critical one. The other one is, where are there products or business processes that are also at scale that we can essentially attach this technology to and get good leverage off it? So content production, which Ted went through, is a big one. Member experience is another big one. Now, we've been in personalization and recommendation for, 2 decades, but we still see tremendous room and opportunity to make it even better by leveraging some of these newer technologies. We see that recommendation systems based on these new model architectures not only improve the current personalization, but it also allows us to iterate and improve more quickly, to improve that velocity. Things like adding support for different content types going forward, that's much more quick, much more efficient. And as we noted in the letter, we already saw in this last quarter, these new capabilities driving increased engagement with the service. That's super exciting to see. And the better we execute here, the more our product experience acts as a force multiplier to the large content investments we make. So there's sort of a multiplier effect. And the last area I'll mention is advertising, which again, we're growing scale in, and we really see an opportunity to leverage AI within our Netflix ad suite, make it easier to design new creative formats, custom ads, improve contextual relevance. And the technology stack just allows us to roll them out more quickly, more effectively, and allow partners to leverage those things in an easier manner.
Great. We have time for one last question, which comes from Rich Greenfield of Lightshed Partners. He's asking about Reed's decision to not stand for re-election at our upcoming annual meeting. The question is, you have talked publicly that Reed Hastings preferred to build versus buy. Was Netflix's decision to pursue Warner Brothers a key factor in his timing of leaving the Netflix board this year?
So sorry if anyone who was looking for some palace intrigue here. No, not so. Reed was a big champion for that deal. He championed it with the board. The board unanimously supported the deal. So we had perfect alignment with management and the board on the Warner Brothers deal. So that was absolutely had nothing to do with it.
And Ted, do you want to close us out then with some words on the decision?
Absolutely. Look, Reed Hastings, our founder and our board chair, let us know that he's decided not to run for re-election for our board at the next shareholders meeting. It's very unusual for a founder to step away from the board of the company after succession, but Reed is no ordinary founder. The first time I met Reed in 1999, he said that he was building a company that would be around long after him, and that requires succession. Now imagine talking about succession while you're just starting to build. When Reed took the first steps in all of this more than a decade ago, he said he would hang around for about another 10 years. And it's only been 6. But this is Reed's style. Make decisions and move fast. We have a long history of going from brainstorm to scale at breakneck speed in almost everything we do. Reed will remain the chairman and the member of our board through his current term. The board and the Nom and Gov committee are going to take the next steps in reshaping the board in the months to come. But I want to say on a personal note, I've been very fortunate in my life to have great bosses, people who've inspired me, who've coached me, who gave me opportunities. Reed did these things at levels unimaginable. You know, Reed is an economist and an engineer in his head, but he's a teacher in his heart. And Reed not only shared the spotlight, a real rarity in Hollywood, by the way, he pushed me into the spotlight and celebrated the wins and coached through the misses and, in short, made me the executive that I am today. I am forever grateful. He built a company of risk takers and a culture where character matters and nobody rests in the pursuit of excellence. I have loved working with and for Reed through amazing twists and turns in our business, and he has modeled what it is to be a leader and a friend. You know, in reflecting on Reed's leadership here at Netflix, I was reminded of a quote from Max Dupree. He said, "The first responsibility of a leader is to define reality, and the last is to say thank you. And in between the two, the leader must become a servant and a debtor. That sums up the progress of an artful leader. Reed Hastings is the ultimate artful leader, and he leaves me and Greg enormous shoes to fill. You know, in the spirit of an artful leader work in progress, I say to Reed, thank you."
Ted, I'll join you. I would just say that from the very beginning, Reed essentially established the standard for what leadership, for what culture looks like at Netflix. His vision, his willingness to take risks, to embrace change, to motivate change, really, to be transparent even when it's hard to be, his total commitment to our values, to always putting our members and the company first, have shaped every part of what Netflix is today. And the innovations that Reed championed didn't just build Netflix. They helped move a whole industry forward. They expanded what is possible for storytellers around the world, for audiences. We now bring stories from around the world to audiences in ways that weren't possible, weren't even imaginable before. And we got to this point because Reed has a way of pushing you to think bigger, to be more honest, not only with others, but with yourself, to own your decisions, but always in a way that made you feel supported, trusted. He would debate his perspective with tremendous passion to try and get us to the best, most informed answer, but then would support you in your decision with equal passion, even when he personally disagreed. And then even better, he would celebrate you with even greater passion if you ended up being right. I think actually those are some of his most favorite moments. And that style of interaction has quite literally shaped who I and many others across Netflix are today. And a lesson among many that I learned from Reed, and perhaps the most meaningful, and certainly I think the most apropos to this moment, is a realization that while many of us can spend most of our lives tremendous effort into building something we believe in, something we're proud of, how we hand that work off to someone else is of equal importance to all that time building. And we should put in equal effort, thoughtfulness, planning into that transition as we did into all that came before it. So when my time to transition comes, I aspire to be as selfless, disciplined, and graceful as Reed has been. So Reed, thank you for the trust you placed in us, the example you set. We're going to carry those principles with us every day.
Thank you, Reed. I echo that as well.
Same. You couldn't say it better. It's weird. It's just I get chills thinking about it. It's oddly to spark so many memories, but one thing standing out for me right now, which is just real time, is that big singular red N of the Netflix logo, because it seems so appropriate. Reed, you're literally an N of one, forever DNA of this place. So thanks for everything.
Great. And with that, we'll conclude the call on that note. So I just want to thank everybody for joining us again, and we will see you next quarter.
Well, all right. Pretty exciting. You guys are talking about the market being bearish. You literally just hit all-time highs today on the NASDAQ and the S&P. If you think the market's bearish after hitting all-time highs, that's actually insane. I don't even know how you could have that perspective. You know, if you were bearish like 2 weeks ago when the market was selling off for like a month or two straight, sure, you know, I could understand why you'd be bearish during that time. But being bearish now when you literally just hit all-time highs, Yeah, I disagree. That's a wild perspective. That's a wild perspective. Bearish means, you want to know what bearish is? Lower lows and higher lows. When you create a new all-time high, that is a higher high. That is not bearish. So I don't know. I don't know how you could even think the market's bearish when you hit all-time highs. Doesn't really make sense. Doesn't really make sense. What's up, William? Market looks good today. Yes, sir. I mean, if people are still bearish as it's hitting all-time highs, I mean, that's a pretty tell sign that it's gonna keep going up. I mean, it could sell off again. You could double top the all-time highs. That's definitely possible, but doesn't seem likely. Well, you guys got anything to talk about? Because this might be the end of the stream if there's nothing to talk about. Here's a little like tweet thing, I guess. I don't want to read that actually. I'm good on that. What's my view on Palantir? I think Palantir's overvalued as fuck, so I don't really have an opinion on Palantir. I don't think a $10 billion... Do they even have 10 billion in assets? I don't even think they have 10 billion in assets. I don't think a company with not even 10 billion in assets should be trading at a 200 billion market cap. That doesn't make any sense. But yeah, I don't care about Palantir. I don't think about Palantir. But nobody's typing in the chat, so I guess I'm out of here. Appreciate all the OGs. Thank you guys for always supporting the stream. God bless you. If you're new here, appreciate you stopping in, giving the stream a chance. Hopefully we'll see you again. But yeah, no stream tomorrow. There's nothing happening, but I'll see you guys next week. There's some earnings and stuff next week, and you know, hopefully there's some like GameStop articles or something to talk about or something to read or anything, because yeah, not very exciting, but I appreciate you. Later, AA Ron. Appreciate you always supporting the stream, bro. I appreciate it. Hope you guys have a good weekend. I mean, maybe I'll stream tomorrow, but probably not. Most likely not. So I'll see you guys next week. And I hope you guys have a good weekend. I appreciate you. And yeah. God bless you. Shout out to GameStop. GameStop's crushing. Maybe you'll see. I mean, we'll see if it keeps crushing. We'll see. But yeah. I'll catch you guys later. Have a good weekend.